Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
What's up, lads? How's it going?
Hello.
Hey, Alex, Tiger.
What
Good,
is
thank
going
you.
on?
Good, thanks.
How
Nice
you
meeting
doing over there, Richard?
Alex.
Oh yeah, this is you guys' first time on. Okay, nice.
Yeah. First time together, yeah.
Getting warm.
How's your weekend been? Good? You behave yourselves?
I tried.
As much as yeah.
As much as
I
you
think
could,
I was
yeah.
pretty successful. Yeah. We had a big old pool party, so
Oh, nice.
had quite a few people over. Quite a few people, and got some sun. Wore my arm out
Okay.
playing catch with a friend of mine's son. We played for probably 2 hours in the pool throwing the football around. So yeah, I'm a little sore today. Needless to say. Yeah.
I see.
She said, just let him know whenever you're ready to take a break.
Cold in this office.
Yeah. My friend, she said, let me know if he gets if he's too much. Of course, me, I'm trying to show that I can hang with the youngin. So I just kept going. That boy didn't stop. He had energy the whole time we were there. I was pretty much throwing the ball around the whole time. I didn't get a sunburn, so that was a good thing. Yeah, I probably should have wore sunblock, but I didn't. But I think I lucked out.
Yeah.
So all is good. What about yourself, Richard? Any barbecues?
No, I didn't have a barbecue. Enjoyed the rugby. I don't know if you follow rugby, Alex.
I do indeed follow the
He
rugby.
does indeed, yeah. So yeah,
We have a
we punished the All Blacks a little bit on Saturday, which was good to see. But I could only catch half of it because I had to go watch my boys play soccer. At least catch a bit of that. So yeah, then after that it was just chill. Made some nice dinner Saturday night, which is a normal thing in the house. Made a nice stew, and then that was it. Sunday yesterday spent a bit of time in the garden. Yeah, so nice and chilled,
Nice.
relax. How about yourself, Alex?
Well, I was just gonna say we have a rugby player. We have a rugby player playing on one of our NFL teams over here. A former rugby player, Matt Ariza.
Oh.
I don't know if that name
Yes.
sounds familiar or not.
Reece Zammit. What's his name? The Welsh.
Reece
dude?
Zammit. Yeah, the Welsh bloke.
I don't know if he's.
Well,
still
there's that
there,
guy
is he?
too. No, I was actually referring to another one, but yeah, that guy was on our Chiefs for like training camp last year. The Rand Zammit, what was it? Yeah, but then he ended up going to the Jacksonville Jaguars. Yeah. So I don't know if he's still in the league or not, but yeah, we got another guy, Matt Ariza. I think he used to play rugby too. But
Okay.
yeah, our teams aren't doing too well. The season just started. We're already 0-2. Not looking too good.
Yeah, it's not cool when it starts like that. Huh? But anyway.
It's a long season.
Oh, anything else, Alex? What do you get up to?
Well, I watched the rugby myself, following a bit of the NRL. I'm in Australia, so down south, Melbourne Storm. Watched them play. I did catch the South Africa-New Zealand game actually. My best mate's from Durban, so we always get around when South Africa are playing, and I get to experience the Springbok fans going absolutely crazy every single time a referee makes one slight bad decision. But
we all do. Yeah, no, we
That
were
was my
happy
weekend.
about the referee like a couple of weeks back. It was, but we just played terrible, and luckily we made up for it this past weekend, which was great. It was a proper hiding. Anyway, if you're New Zealander or keep watching this stream, please do not leave. Guys,
I'll tell you.
Maybe share your charts. I'm actually like sweating my behind off here because they can't make their minds up whether they want the air conditioning on full blast or whatever. So I switched it off a little early on, and now it's back on again, and I'm wearing a hoodie and I'm sweating. So I'm just going to step away for 2 minutes and just change my shirt
that's fine.
to something cooler. All right.
Yeah, back in. Go ahead and pop up my chart. But yeah, just to finish on the rugby thing, those dudes, Alex, are fit. Like,
it's ridiculous.
It's incredible how giant all their neck muscles are and their upper bodies. Like, they kind of put our NFL players, some of them, to shame here in the U.S. as far as U.S. football goes. But it's no surprise to see some of those guys coming over to the NFL. But it would be nice to get somebody that turns into a star in the NFL, just to kind of bring more attention over here to rugby, because rugby's not really a big deal over here in the U.S. I mean, it is in some of the universities and high school teams here, but it's not anything that anywhere near as popular as U.S. football and obviously baseball and basketball. Those seem to be top 3 sports over here for TV viewership anyway. But no, I've caught a few of those matches. Those dudes just go at it. So
they do, and no pads.
No pads, exactly. That's why I say they got to have the gigantic traps and neck muscles and everything. So kudos to those guys. I couldn't imagine being stuck in the middle of them when they're scrumming.
If I have to get tackled now by one of those guys, maybe even the smallest guy in the field, I'll just break. I will die.
Did you used to play rugby at all?
Yeah, at school. It was sort of
in school. Okay.
And it was mostly a winter sport. So that was definitely when winter came, started playing. I played A team a little bit for most of the grades that I was in, but hard. I've had concussions multiple times, hence why I'm probably crazy enough to trade. It was quite an experience. I mean, it's great, but it's hard. and you heard so much afterwards. I mean, these guys these days that play well any sport, they're so conditioned and doing it professionally. With proper sports manager stuff. Medical teams, and I think they just get managed way better. Back in the day, you didn't care. You just take a rugby ball and there you go, right? And you hurt for a good 3-4 days afterwards, for sure.
Yeah. Kudos to those gents. So awesome. Well, just kind of taking a top-down look at what the big banks and institutions did last week. It looks like the main thing that they did was loaded up on the Dow Jones as far as long contracts. They did increase change percentage was 7.38%. So yeah, it looks like they added there, and then they added to the NASDAQ 3%. So as far as the U.S. indices go, those were the top buys. And then as far as the other two stock currencies, Russell, they actually sold off on the Russell and they sold off on the S&P. Very, very slightly on the S&P, just minus 0.37%. Not a huge deal. They loaded up though on the short contracts, 24,000 it looks like. And they did add a modest amount of longs, but yeah, overall it was a minus 0.37. They're still very heavily net short the S&P, 405,000 overall to just 231,000 longs. So that's just kind of a updated look at that. And then, yeah, as far as platinum goes, minus 1.91%. Added quite a substantial amount of shorts, a small amount of longs. But they are still – oh, I'm sorry, I'm looking at the wrong one. Russell, yeah, they added 9,100 shorts, and then they got rid of 2,800 longs. So they're still heavily net short there as well by 68%. So 68% there, 63% for the S&P. And then as far as the NASDAQ, they're still overall net short. Well, they're less net short. So 41% net short, and then 53% for the Dow. So yeah, a little bit of a mixed bag of results on the indices. They bought 2, they sold 2. So that's just a little bit of a look at what the banks did. As always, anybody in the chat, which, by the way, good morning, good afternoon to you, Nigel. Sympathy. Good morning, everybody. Yeah. Nice to have you. Yeah, just as always, throw in tickers if you want us to check out any specific currencies or whatever, or any specific pieces of fundamental news. I'll go over the economic calendar here in a minute. We'll see what we got on tap for the week. But yeah, just back to the.
How would if the interest rate decision, for example, would that also be calculated into your algorithm or whatever it is you look at there? Like if they were to reduce it, for example?
Okay. Yes. Yeah. So when they have that come out, yeah. So that'll be this very last item on my top setups, interest rates. Yeah.
Gotcha.
Yep.
Okay.
So this whole thing will be changing regardless of what they do, but it's just one item, right? Okay. It's just one item in the mix. Now, obviously, it's going to have big effects for the moment, but when it comes to more longer term swing trades, right? That's why it's just one piece of it. Yeah, in the short term, the intraday traders, the 1 minute, the 5 minute, the 15-minute traders, yeah, it's going to turn everything upside down, regardless if they drop it 25 or 50. Because I know there's still a small percentage the chance that they will drop at 50. But, yeah, it's got its own category for sure, which we'll get to the top.
West on Wednesday feels me. We'll just have to see. Who knows? Sometimes everything's just factored in and expectations are already factored in, and then nothing happens. But
right.
I don't know.
Yeah, buy the rumor, sell the news. Buy the rumor, sell the news. It's cliche as old as time when it comes to trading. So, yeah, they've pretty well probably already priced it in. I mean, that's one clue I like to look at the COT report for, just to see if maybe that's kind of a prelude, right? Buying the Dow, buying the NASDAQ. I mean, it's mixed results today because they're buying 2 and they're selling the other 2, but it's just kind of a nice little way along the way each week to see, just to kind of get a preview for things to come, because they obviously know things we don't. We all know insider trading happens all the time. So It all filters to the banks, and we're the last ones to know about it. But yeah, so as always, this COT report is accurate as of the previous Tuesday. So it comes out on Fridays around 4 p.m. my time, Central Standard Time, here in the States. And it's always 3 days old. Look at it that way. It's 3 days old at that point, because these numbers are taken as of the Tuesday before that Friday. And then it's accurate through the previous Tuesday. So I always say, just look at it as 3 to 10 day old report. It's kind of confusing. That's just the way they do it. It is technically a lagging indicator, but when you get the big banks positioning like this, they're typically holding on to trades longer than probably most of us. Right. So, and they've got their intraday traders as well. They're prop traders and such, and not to mention the algorithms, which is a big percentage of their book, their book of business. But again, it's just it's just one indicator, just like the interest rate indicator. It's just one item in this whole list of items I keep track of. So yeah, COT report has its own little spot right here for every currency, gold, silver, Bitcoin, all the indices and everything I track. Bonds, 10-year bonds is also trackable on here. I don't trade bonds, so I always just filter it out. Unless it's something really ridiculous and crazy. Like if it's got a very bullish or a very bearish rating, I'll throw it on here. But as far as, any other score, I usually just keep it filtered out. But yeah, after the COT report shook out, and after Friday's, we just had the Michigan sentiment report come out on Friday, and then the GDP for the British pound. But yeah, after last week's, Euro financing, the CPI for the U.S., the unemployment, after all that shook out, looks like we're left with pretty much 5 very bearish items here. Aussie New Zealand, Aussie Swiss, Aussie CAD, Pound CAD, Aussie Yen. That's the top bullish scores that I'm tracking, that I'm getting. So definitely got alerts set on, I think, all those. I'll take a look here in a minute. But yeah, that's going to be the top of my here. And then on the bearish side, CAD Yen, it paid me a nice trade last week, so I'm going to try to find another spot to jump in this week, because it's still giving me the strongest bearish score. So CAD Yen, Euro Aussie, it's really going to be probably the top 2 on the bearish side. And then what else have I got? Yeah, and then just going back to this week's economic releases. Yeah, let me kind of zoom in a little bit. So we don't have a red folder event today. We just have the Empire State Manufacturing Index, and then the Eurozone president's going to speak, flapper lips, Lagarde. So tomorrow, Tuesday, we have Canada's Consumer Price Index coming out. We'll get an idea of what their inflation's looking like. Looking like the CPI is the main month over month. Looks like that one's projected to drop a couple 0.2%. But other than that, the median, the trend, all that's looking pretty well the same as the previous one. On paper anyway. As always, this thing could completely change when it releases tomorrow, right after our stream ends tomorrow, about 15 minutes after, 8:30 New York time. And then the retail sales for the States, looks like they're projecting a 0.1% higher on the core, and then a 0.3% drop on the regular report. So a little bit of mixed info there as well. If that were to all hold true, we'll likely just get some wicks above and below price at that point, unless this thing just drastically changes, right? And then Wednesday CPI for the pound, followed by our first rate statement. So we're going to look to potentially get a 25 basis point cut on the Canada dollar. 9:45 New York City time, Eastern Standard Time, followed by their press conference a little bit after. And then it's on to the big news of the day, which is our federal funds rate, our interest rate decision. So again, they do have it projected as 25 basis point cut. I actually haven't looked today. They had a small percentage chance on the 50-point cut, but I don't know what the percentage is. So let me just take a quick look at that. Okay. So 94.2% chance that this will be the 25 basis point cut, but they still have a 5.8% chance on here that will drop at 50. So either way, whether it's 25 or 50, we're going to get some nice volatility, some nice volume stepping in. I caught a little bit of Tony last night on Quiet Markets talking nonstop, Alex, about stay out of trades during during that rate cut. So we'll be repeating the same thing all week. Stay out of trades, stay out of trades. At least 15 minutes, 30 minutes prior, and probably a good hour or so after the report release. It's just a good idea just to take heed, beware. And as Coach Michael often says, if you like your trade you're in at that point, just close it and reopen it after everything dies down. It's just the safest thing to do. Whether it's the interest rates, whether it's the NFP report that always moves markets like crazy, or some of these other red folder events, it's just a good idea to save your money. Because here's the thing, even if you're in a trade and let's just say it goes for you, let's just say it jacks up your unrealized volume. Well, was that really skill or was that just luck? Right? That really wouldn't be any different than throwing money into a slot machine and pulling the handle, right? You've got no control over that. So, sometimes the worst things that can happen when you gamble like that, you actually get a big winner. That could be that could be your undoing, because it's like playing Russian roulette, right? Throwing all your money on red, throwing all your money on black.
Bad habits. Not a good thing.
Exactly. You might get lucky a couple times, 3 times in a row, but this is a numbers game. To use my favorite bowling analogy, average is average. Just as sure as I bowl a high 250 score or 260, I'm going to turn around and throw a 150.
Yeah.
So the point is, you can only get lucky so many times before you get just totally burned and potentially even wiped out, especially if you're, if you're somebody crazy enough to not trade with a stop loss. So, so always use stop losses, obviously, first and foremost. But sometimes these things can gap through stop losses depending on brokers. So you got to be aware of that as well. Or do a gap around it. So it's just something else.
From Nigel, if you don't mind. Tiger, let's quickly address that. Alex, you want to help me? Question, or should I?
Say that again, sorry?
Can you help me to understand something here? Last week I won a $25,000 account here on live for futures. Can you please help me understand the difference between futures and CFDs? Alex?
Yes. So futures is
we can all share our
separate market. Yeah. Well, Forex, for one, is going to be looking at the pairs. So for Euro, for example, we've got Euro USD, Great British Pound, CAD JPY, etc. So we have completely different brokers. We have completely different markets. We have a completely different way of measuring as well. For example, if you've ever heard the word pips, that is a Forex term. Whereas you go on to the futures market and you're going to hear something like points or ticks. So futures trading involves standardized contracts to buy or sell an asset on a regulated exchange at a specific future date, right? Whereas Forex, the one that we have here, it's this more traditional environment, and we've got a lot of asset diversity, commodities, indices, that sort of deal through here. So that's what we're looking at. You've got different brokers, different way of measuring it, different charts. And Forex really is just focusing on currency pairs as a whole. Now, you can use the exact same methods of trading. For example, smart money concepts, ICT, supply and demand. That works across all markets, whether you're in crypto, whether you're in Forex, whether you're in futures. There's a principle that underlines the market. It's really just, what are you trading? That's going to be putting you into that market where there's going to be a few key differences. So hopefully that helps you out there.
There's just a few technicalities. Well said, Alex, especially like on the exchange side of things. So also, Nigel also asked about CFDs, which stands for contracts for differences, right? And now your
Yes.
CFDs mostly include crude oil, silver that we've seen, gold, but they're not per se futures markets. Real gold, well, not real gold, but gold is traded on a futures exchange. Silver is traded on a futures exchange. Copper, nickel, natural gas, basically all of your commodities, and as well as then your indices, right? Now, if you get, for example, the NAS 100 is a CFD, and basically it just tracks the price action of the NASDAQ, which is actually physically traded on the NASDAQ, right? Or it's an indice that's comprised out of all of these stocks that make up the industry, right? But they are traded on futures exchanges. CFDs are not traded on exchanges. They just basically track or mimic the price action of what the futures are doing, all right? And CFDs, you will have different CFD brokers and all that stuff. So it's really up to them. Like Forex doesn't have a centralized exchange. CFDs doesn't have a centralized exchange, right? It's basically up to, can I say, trusting the broker that basically are they following the price action of what the futures market is, as CFD has been created to track. Is it done, properly and so forth? What's the other thing? Like you said, Alex, we'll talk about pips in futures, probably CFDs as well, where it's ticks in futures. Also, when it comes to futures, you'll buy a contract if you want to go long, or you'll sell a contract if you want to go short, right? And that one contract, you can't buy half a contract, or you'll have to buy in multiples then, like 2, 3, 4, 5 contracts, or whatever the case might be. If you, for example, buy the NASDAQ, the symbol would be NQ, where for CFDs it will be NAS 100, right? But when it comes to CFDs as well, same to Forex, you can control your position sizing by adjusting the amount of lots you want to be trading. There's no such thing as lots in the futures markets. You can, like I said, only buy one contract, and generally you'll have to cough up a certain amount of margin for that one contract. All right, and also the tick size, like we talk about pips in futures or Forex, in Forex or CFDs. If you change or manipulate the lot size, that will manipulate the pip price tag, right? If it goes up or down. For example, if you trade crude oil, I think it's $10 a tick if you buy one contract. You can't minimize the dollar per tick, right? So you can trade micros, which is recently, well, not recently, I think about 4 or 5 years ago that's been released, to if you want to have more exposure to trade the futures markets. And basically they trade at a tenth of the price of the big daddies. Like if you trade the ES, for example, which stands for S&P 500, I think it's $12.50 per tick if you buy one contract. If you trade a micro, it trades at a tenth of that. So if you trade one micro of the ES, it will be the micro ES, it will move at $1.25 per tick. And then you can buy multiples of those contracts or sell multiples of them. So that's how you control your position sizing in the futures markets. But that wasn't possible until the micros were actually released. Yeah, Nigel, I can go on and on and on, but that's pretty much what I think. Well, I'll explain the difference. Hopefully that helps.
Yeah.
And also with the $25,000 account, you probably hear from the futures coaches that you got to be careful that for trading futures, let's say for example the NASDAQ or the NQ, that thing can move extremely fast, and there it's $5 a tick on the NQ, but believe me, a tick like disappears like very fast. It can move very, very fast, right? So very quickly you can end up with a large loss on NASDAQ, even the ES, crude oil, whatever that you want to trade on the future side. So I think even with that $25,000 account, it's probably safer trading the micros, which I do believe we offer, right, at Hola Prime on the platform. So you can reduce for your account size, reduce that amount of exposure that you have when you trade futures.
Yep. Yep. Good stuff. Yeah, I mean, I like CFDs because I like the 24-hour trading, right? You're kind of limited on the hours on the futures, and but yeah, just think of it as an IOU. I think of CFDs as you're trading with your broker. Yeah, you're trading with the broker essentially on the CFDs, right? It's kind of like an IOU. Yeah. So, but yeah, in the futures, you're trading directly with the market itself. So, yeah, there's pros and cons on both. Just depends on what tickles your fancy, so to speak. But
guys, with that being said, cool. Tiger, we do have news right now. Actually,
news time.
So viewers, please stay tuned. We're going to hand things over to Tiger. Will read us the latest news, what's coming up, what to expect this week, and always, as always, with a dash of fun thrown into the mix.
Awesomeness,
or humor, should I say? All right, Tiger.
Awesomeness.
Over to you. We'll be back soon. Cheers, guys.
All right. All right, folks, welcome back to Forex Fire, where we turn up the heat on the markets and hopefully don't get our fingers burned. Strap in because we've got a packed week ahead, and yesterday was all about the markets taking a deep breath before central bank chaos ensues. Like watching traders do yoga, a lot of deep breathing and holding positions. Major currency pairs, they were basically napping in familiar ranges to start the week. Because everyone is saving their energy for the main events, a slew of central bank meetings and key data drops. The big story from Friday that continued to echo was Fitch Ratings downgrading France's credit score. They cut it to an A+ from AA-, basically saying the political deadlock there is like a bad soap opera that just will not end. And they expect the upcoming budget negotiations to be a total mess. So the euro a bit under the weather, with Euro-USD pair consolidating above 0.17 level. Now later today we'll hear from ECB President Christine Lagarde at some fancy 25th anniversary event in Paris. Let's see if she brings any croissants of wisdom to the table. Over in Asia, data from China was about as exciting as a lukewarm cup of tea. Retail sales and industrial production for August both came in weaker than expected. Retail sales grew 3.4% year over year, missing the 3.8% forecast. And industrial production expanded by 5.2%, and that was below the 5.8% estimate. You'd think this would hurt the Aussie dollar, given China is its biggest customer, but nope. Aussie dollar US dollar pair was actually up slightly, trading above the 0.665 level. I guess the Aussie dollar has a high pain tolerance. The US dollar index, the Dixie, was basically doing the cha-cha in a very small room, fluctuating just above the 97.5 level. It's like it's waiting for its big moment on Wednesday when the Fed makes its move. Everyone and their grandmother is expecting a rate cut, so the dollar is feeling a bit shy. The pound, meanwhile, was holding its ground comfortably above the 1.355 level. It's got its own big week with UK employment data on Tuesday, inflation on Wednesday, and then Bank of England decision on Thursday. It's like a triple header for sterling fans. Now let's talk about the drama queen of the commodities, oil. Crude oil decided to extend its gains for a second day, hitting session highs near the $63 per barrel level. Why is that? Well, because Ukraine decided to play darts with Russian oil fields over the weekend, launching drone attacks. It's like a high-stakes game of Risk, but with real explosions. This provided some support, although concerns about oversupply and weaker demand are still lurking like a party crasher. A Russian spokesperson said the damage was minor, but it reminds everyone of last summer's attacks that actually crippled their capacity. So WTI is still struggling near multi-month lows, down about 20% from January's highs. It's been a rough year for black gold. Speaking of regular gold, our favorite shiny safe haven, was pretty calm, holding steady below the $3,650 per troy ounce level. It's consolidating after its recent record high, basically taking a nap before the Fed wakes it up. Rising bets for Fed rate cuts are keeping the dollar depressed, which is good for gold, and geopolitical risks are adding some support as well. But everyone is in wait and see mode until we get through this week's central bank bonanza. And then there's the yen. USD JPY pair was stuck in a narrow band around a 147.5 level. It's like a stuck record playing the same tune over and over for a month. Political turmoil in Japan has everyone confused about when the Bank of Japan might actually hike rates again. Prime Minister Shigeru Ishiba resigned, adding more uncertainty to the mix. It's like a game of musical chairs, but with prime ministers. So the yen is being capped by this ambiguity and a generally positive risk tone, but it's also getting support from the fact that the Fed is about to cut rates while the Bank of Japan might eventually hike. It's a classic case of will they or won't they? We'll get the answer from the Bank of Japan on Friday. So that was yesterday in a nutshell. Markets were mostly range-bound, waiting for the big fireworks later this week. It was the calm before the storm, or as I like to call it, the appetizer before the main course of volatility. Now let's look at what's on the docket for today. So today's economic calendar is a bit lighter, but we've got a few things to watch. The European session features Eurozone trade balance data for July. Then during the U.S. session, we get the Empire State Manufacturing Index for September from the New York Fed. It's not the biggest release, but it's something to tide us over until the main events. And as mentioned, ECB President Lagarde will be flapping her lips in Paris. Maybe she'll give us a hint about what she thinks of France's new credit rating. Other than that, traders will be keeping an eye on any further geopolitical headlines, as always, especially regarding Ukraine, Russia, and the fallout from those oil facility attacks. And also the U.S.-China trade talks are ongoing. So any headlines from there could cause some ripples as well. So to sum it up, Monday was a day of consolidation and preparation. The euro got a downgrade hangover. Oil got a geopolitical caffeine boost. And everyone else was just waiting for the Fed, the Bank of England, and the Bank of Japan to finally show their cards. Going to be a wild week, people. Make sure you've got your risk management helmets on. So that's all for this pre-stream news update. I'll see you on the other side. And then last thing, just to, again, go over that calendar. Yeah, first red event we have, red folder event's going to be on Wednesday as far as the U.S. core PPI. RBNZ, Governor Hawksby is going to speak later in the evening on Wednesday. And then, yeah, Thursday morning, we'll get the Thursday morning here in the States, we'll get the euro rates, followed by the U.S. CPI and the unemployment claims. And yeah, simple as that. So, but yeah, it's all going to be about the Wednesday rate decision here in the States. So I believe that's all I have. Back to you guys. We'll get back into some more charts.
Good stuff, Tiger, as always. Thank you.
Very good.
Tidbits in there.
Oh my, you know what I just realized? When I was looking at the calendar, I had it flipped on last week, so I need to clarify that. Tuesday, we got the CPI for Canada. I just went over that. I was flipped over because I was looking at the Friday information. So let me fix that. So yeah, Canada CPI on Tuesday. Retail sales on Tuesday as well for the states. What a dingbat. And then, yeah, obviously the rate statement's coming out on Wednesday. Good grief, Tiger. So Canada rate statement and the U.S. rate statement on Wednesday, yeah. And then Thursday, we obviously have the British pound and the Bank of Japan. So that's it. Right. Sorry about that. What a goofball. Ding dong.
Right.
All right. So we've went over
a poll going on. Please do participate if you don't mind. The poll's asking London Open vibes with our coaches. Today feels like Alex spotting setups before coffee, Richard sketching clean charts, Tiger hyping the energy like a DJ, or silent charts plotting mischief.
Yeah.
I think it's a little bit too late for you to have coffee now, right, Alex? being all over Australia. What time is it there by yours? Anyway.
Late in the evening, isn't it?
It's 6:40 p.m. 6:40 p.m. where I am right now.
Okay. Okay.
Yes.
Yeah,
Well, it's 3:40 here, Alex. I'm burning the midnight oil with you.
Yeah.
10:40 years, so it's a bit more respectable.
Good stuff. All right. What else did I want to go over? So so we've already pretty much went over the calendar there. So let me just minimize that. And then just getting an updated look at the economic heat maps here. I mean, the economic surprise meters. So the dollar it's still hovering at 22%. So 22% of their recent reports have beat expectations, which by default means the other 78% have been missing. U.S. has been missing left and right. So it's in the gutter with the Swiss franc and the Canada dollar from just a pure economic fundamental analysis perspective. And then the British pound, the Aussie dollar, a couple of the stronger ones. And then that's pretty well it. Yeah, New Zealand was at 50 yesterday, but they've actually went down to 38. So, yeah, it's all about any chance I get to buy the British pound, buy some of Alex's Aussie dollars. that's going to be my main idea. And then obviously the flip side, sell the Swissy, sell the Canada dollar, sell the dollar, the US dollar. So this 43% worldwide average. Now, this is the average of the top 8, right, currencies, the 8 majors. So this thing's starting to look pretty poor as well. I mean, really that 40 to 60 range is kind of middle of the road, but when you start getting below the 40%, it's just economic underperformance across the board. So don't like to see that. You like to see that at least over 50. It was at 60% here just about a month ago, but all these low scores have just been dragging the overall average down. So that's just a 50,000 foot view of the currencies, and then just drilling deeper into the dollar itself. Yeah, we already talked about the 22%, but none of the inflation and jobs numbers have been going good at all. They're all missing expectations. These are the jobs here at the bottom 5, and then inflation numbers haven't been doing too good at all either. The last bullish report was September 4th when we had the good services PMI number come in. So that was obviously a bullish for the market, for the currency and for the market. So it's just a lot of ugliness, a lot of neutrals, a lot of bearish, a lot of misses. So that's definitely why gold and silver have just been kind of up there. Speaking of gold, it's still given a bullish score of a 7. And like I was telling Coach Alex last night, I got mostly Aussie pairs up here. I mean, they're all pretty much all of them: Aussie New Zealand, Aussie Swiss, Aussie CAD, Aussie Yen, Aussie dollar, as far as the buys. And then even buying the Aussie against the euro, so a short sell of the euro Aussie, and then the pound Aussie. So every one of them. So gold and the Australia dollar, that's really my top 2 watches this week. And then obviously everything. Yeah, it's simple as that. And then obviously everything could be changing with these rate decisions. So we'll see how that works out. But again, it's only one of the pieces of fundamental analysis, right? It's just one box. So, I like to take it into account with all the rest of it. But yeah, the day of, it's going to be going crazy. So it's going to be the focal point. But, after the volume kind of cools off, who knows how long it'll take, right? An hour, 2 hours. But at some point, the volume will kind of cool down, calm down. And, at that point, just figure out where the trend is going and hit your trailer to it and ride it. So, but yeah, as far as the dollar goes, it's actually got, so I do have the dollar CAD on the bullish list here, because again, the Canada dollar is it's just as weak, I should say, as the dollar, but a lot of neutral scores. But then you just had a few US dollar pairs that were, believe it or not, just a little bit better. I should say we had a few US reports that were just a a little bit less bad than the Canada dollar, if that makes sense. So that's why I'm getting a bullish reading on the dollar. Yeah, pound dollar down here.
What was
I don't really like
oil score there, Tiger?
Let's go. Let me go pull it up off my other screen here. It's in a neutral. Yeah, so oil is a -2 at the moment. Yeah, neutral, and it's -2. So just a little bit bearish than obviously bullish. Bitcoin is a -1. All the U.S. indices are neutral as well. Dow is a 1. S&P is a -1.
Oh, did that go negative?
Yeah, they're both just, the U.S. indices are pretty well hovering around the, +1 to -1 area. So they haven't been on my radar for a few weeks just because they've been stuck down there. So yeah, that's just a little bit about the top setups. They got U.S. 10-year treasuries as a positive one, so neutral, but just a tiny bit, 1 point of positivity on it. A lot of red, a lot of blue, but there's just one more little bit of a blue, just a tiny bit more blue on there as far as beating expectations. But yeah, Bitcoin is a -1. It's not really on my radar either. The German DAX is a -4, so it's close to a bearish score. And then the Nikkei in Japan is a -1, so neutral. Yeah, it's been a great week or so of just a lot of the minor currency pairs. It really has been. I mean, a lot of these that are usually buried in the neutral zone at times, or most of the time, like New Zealand CAD, New Zealand Swiss. I mean, those, ever since I've had this software, it's been tracking those around the neutral camp as well, but we're finally starting to get a little bit of pop in some of them. So,
okay, cool.
So yeah, that's kind of that's all that. That's right. It's all about the Aussie. So yeah, let's go take a look at a couple of them. Aussie, New Zealand, Aussie, and Coach Alex's neighbor. Take a look at this. Yep. 15. Yeah. So this morning, while I was writing up my news article, I did observe this demand zone here, and looks like I missed out on it, but I wasn't too excited about it. It was when price moved away from this demand zone, it really didn't move but about a 2-to-1 distance. So because it didn't move that far, I just skipped it, but it still got a little bit of a bounce off of it for about a 2-to-1. So I just wanted to watch it. Didn't really have any interest in trading it. Yeah. Plus it was only a 3-pip range, including a stop loss. Well, 2-pip zone. That's just too small for me. If I'm on a smaller time frame, 5 minutes, 15 minutes, I prefer to have at least a 7 or 8 pip wide zone. This was just too narrow, so that was another reason I didn't take it. But nevertheless, it still did move a 2-to-1 clip. Yeah, exactly. It still moved a 2-to-1 clip. So, but it just didn't have the. It just didn't want to pay that much. Yeah, I mean, obviously we've been making nothing but higher highs and higher lows, but you can never just assume that it's just going to keep doing it. Yeah, if we would have had price hop up a little higher before the pullback, I'd have been more interested. But that's just me. That's just me. So what are we left with here? Well, I don't really like a whole lot in this area here. I do have a demand zone further down, but that's a long ways away. So probably ain't going to get anything down there anytime soon. It's a little narrow on its as well. It's a little bit narrow zone. Price came down and touched right by it, missed it by a pipette. So, yeah, I don't know. I feel like, if price is going to come down, I want it to just jump in there. But there could potentially be limit orders that were in here. Perhaps they bought a little ahead. I don't know. I just think I'm going to pass on Aussie New Zealand. I think it needs to do something a little different. Form a new demand zone. So I just basically need more information. Aussie CAD was my second highest score. So Aussie New Zealand is a 11, by the way. Aussie CAD and Aussie Swiss are both 10s. So here's a demand zone that bounced and worked out. We do have this bigger demand down here. So that's a bigger zone. I like that. I mean, it's about 8 pips or so wide. I do have a 10-minute demand a little further down that I'm kind of keeping my eye on. This big wick is kind of scary, to be honest. So I'm not quite sure I want to get in the middle of that because, I'd probably, some people will get in it and they'll be putting their stops obviously way underneath the wick, but that just dramatically dampens the risk reward, ratio on it. So if price comes down, I'm going to make sure I get a bullish engulfing candle. Maybe something where the volume spikes 2x, 3x, 4x the previous candles. So I just think there's while it is a high score, I just think there's probably some better opportunities out here. I mean, we could always look at this little demand here. Had a really good volume spike, I just realized. So I'm probably going to keep an eye on this one here. And I'm probably going to do this. I'm just going to move up my alert there. If I get into this trade, I would probably prefer, firstly, to see price continue up and close on the other side of this recent high before coming down to the zone for a buy. That would show me that it's a little stronger. I want this zone to be strong enough to take out these highs. So that's kind of, if the market would give me one wish, that's what I would want to see, just to prove the strength. So we'll see. We'll see how that works. The market doesn't care what I want, right? It don't care.
Definitely not. Unfortunately.
All right. Aussie Swiss. A bullish score of a 10 as well. We had a drop into this demand zone, and looks like that one worked out perfect. Alex, I think this is the one that no, never mind. This was from Friday. Never mind. Or no, this was from yesterday. Yeah, this was the one that I was mapping out yesterday right before our stream. Yeah. Mm-hmm. Yeah. It bounced in, and yeah, that's right, because when I started going through these after our introduction, price was already up here, if you can remember. It was already up in this area. So I said I didn't.
Very sad.
I said I can't chase price, right?
You did.
Can't chase price. Yeah, and in retrospect, that would have been a good limit order opportunity because, I mean, it just flew up. So again, like I said on stream last night, just nothing more than a little bit of a moral victory that I picked a good zone. But we'll just let it go. I think I said c'est la vie. Yeah, probably go to a higher time frame real quick. I think I just want to see some new highs. Perhaps the same thing. I mean, this demand was formed from bouncing off of that lower time frame demand. Do I want to take a chance and jump in? Yeah, probably not. I mean, it spiked hard and did jump right back up, but it did very slowly move away. So I'll probably ignore that. I don't know. I would have preferred to see the leg out candle come up here somewhere rather than just barely out of the zone. So that for me is probably going to disqualify it. And not only that, but after the bounce, it didn't even have the power to push through the high. So similar to the Aussie New Zealand I just went over. So I'm probably going to ignore that zone right there. But yeah, this one's obviously old news, so I can delete that. We are left with this 10-minute, I believe, demand. No, I guess that's a 5-minute. So same thing. It's just got that big ugly wick in the underneath it that's kind of messing with the risk-reward argument. Do I put a stop loss under the zone itself? Do I drop it below the origin or the lowest point? So again, similar to the Aussie New Zealand, there's probably just going to be better opportunities out there without having to worry about that funky risk-reward argument there. Yeah. And then Aussie Yen, very bullish score of a 9 as well. let's see here. 1 hour demand clear down here. As you can see, we're in a yellow box. So a yellow box, as always, is a daily supply zone. So that just tells me I need to be careful, because this daily supply, which also has it had a 4 hour supply as well, but it chewed through it chewed through the bottom. I'm sorry, it chewed through the 4 hour zone, but it's still currently in the daily supply. So really kind of not interested in buying anything up here. Number one, it's quite pricey. Number two, the unfilled orders of the daily supply could be pushing price back the other way. So having said that, though, I do still have a couple spots. I mean, I got a daily demand down here with a really good fair value gap. Now, price did retrace most of the fair value gaps, so perhaps some of this strength has been taken away. So I'll probably end up ignoring that one too. But we're left with a little bit of a demand here. I don't like buying a demand zone while being in a higher time frame supply zone. It's just taking away some odds enhancers from me. So probably ignore that as well. If we get a price push all the way down here to the 97 level, we do have a little bit of a demand there. But same thing. It's just not really that strong of a leg out candle. So while the Aussie pairs are giving me high bullish scores, I'm just not seeing a lot of good spots to jump in. Not yet, anyway. Obviously, same thing for this. This, I'd feel a little better about this zone, or maybe another zone that forms in here, if we can push higher, push through the rest of the daily supply, and then come back and find a demand zone to buy to the upside. So that's pretty much what I would like to see. Again, market doesn't care what I want, but that would definitely make me feel a lot better about buying a zone down here if we could see this price action. Because if something's strong enough to push through a daily supply zone, heck yeah, I'll be interested. Because at that point, we got, well, actually on a 4 hour demand, we do have this area here. So I'll probably just go ahead and write that up as well. Just keep an eye on it. So yeah, we got a 1 hour, we got a 4 hour. Do we have any confluence? That's a pretty efficient market right there. So the 1 hour is not really giving me any inefficiencies. We got an efficient market on the 30 minutes. A tiny gap in between these candles here. Taking out the leg out candle. Not really a fan. It's kind of small for me. Let's go look at the 5 minutes. That's as low as I go. Okay, so there's a little bit of a gap here. Little bit of a price inefficiency here. And we have a little bit of an inefficiency here. Inefficiency, I should say. So it's always so you always ignore the leg out candle, but this would be the candle 1, and then candle 3 is where you want to see the gap. So yeah, by definition, on a smaller time frame, that turns this candle down here, albeit small, into a little bit of a demand. And then the same thing down here. You got the very last candle. That's obviously the closest to the origin of the overall move. So for the 5 minute and the 15 minute traders, that would probably be a good spot. But at that point, you're fighting the trend if we get price turning around on a 5 minute, a 15 minute, time frame. So there's always give and take. There's always pros and cons of some of these zones, depending on how far away from the zone price goes. So, but as of right now, even on a 1 hour, like I say, higher highs, higher lows, looks like this supply on a 1 hour time frame is trying to knock price down. So it's trying to keep it from making a new high. We'll see how that works out. So definitely would keep that one in mind as far as a potential take profit as far as a supply zone. But again, all this is in the context of chewing or trying to chew through this daily supply. So probably would just avoid these as well. But it is an opportunity, but yeah, just not my favorite. We could catch a bid there. We could catch a bid there. or just anywhere really within that daily zone. So in fact, I need to turn that, since that is a daily, I need to turn that yellow. I believe that was a daily, wasn't it? Was that a no, that wasn't a daily. I'm sorry, that was a 4 hour. Oh yeah, 4 hour. So it's a 4 hour. So I'll keep it green. I always color coordinate my zones just to help me with time frames and let me know if a zone's been mitigated so that I know not to use that zone over. Also, if it's a mitigated zone, if it's been touched, then I'll still use it as a potential take profit as far as closing my trade out, just ahead of it. So that's why I kind of do that, just for my own clarity. Okay, so Aussie yen, and then the last very bullish score is the pound CAD. And by the way, gents, if you guys see a trade that you want to jump on, just let me know. Just interrupt me as always.
It's a bit quiet on my side at the moment.
Yeah.
Same here.
Yeah.
Yeah.
So pound Canada dollar is chewing through a monthly supply zone. So it's the same as these other pairs. We got unfortunately, a lot of these high bullish score assets are bouncing into opposite end zones right now. So it's just making it difficult to want to be placing an order against that, right? Now, this monthly zone was mitigated way back in February of 2018. So this zone formed in 2016, by the way. So we're looking way back. We're looking in the way back machine. But you just have to be aware of them just in case it tries to knock price against you. We've got a weekly demand inside of the monthly supply. So yeah, it's kind of a cluster, to be honest. Daily, I don't really have anything major here. Got a little bit of demand down here because of the fair value gap. So might be something to keep an eye on. But again, that's a ways away. That's kind of a long ways away from price. But it is a daily demand nevertheless. 4 hour, 1 hour. So I got a 1 hour demand here. And then going down to a 30-minute, we got a 30-minute demand here, albeit kind of skinny. A little bit of a fair value gap coming out of it. So it's just this whole price action on pound CAD is, yes, it's going up and up and up, but it's very, 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 very slow. Gaining about 10 to 20 pips a day of new highs, right? So nothing too sexy. It's just slow grind. But yeah, this is more exciting price action down here than this is. So probably would ignore that, but I still want to keep an eye, see what happens if and when price returns, see if we can get some type of a bullish engulfing on something smaller time frame, like a 5 minute or something, since it is such a narrow range, or maybe even the 1 minute, to be honest. Usually that first couple candles tell you all you need to know if a zone is starting to catch the bids or starting to catch the asks to move it the opposite direction. So
Hey, Tiger,
so yeah, that's
asking if you can have a look at the dollar yen for him, if possible.
Oh yeah, absolutely. Yeah, we can do that. Yeah, so it's obviously in the neutral camp, so it's not on my radar. But yeah, we can definitely take a quick look at it on a technical basis. Just for context, dollar yen is as neutral as it gets. It's given a neutral score of a 0. So it's right in the middle. About half the reports are bullish, half the reports are bearish. So it's just kind of stuck in the middle. But also, so is price, coincidentally, right? It's kind of stuck in a long-term sideways cluster, right? I mean, that's just nothing but a big sideways move when you look at it from a higher time frame. But for a 4 hour trader, for a daily trader, we got a demand all the way down here. It's a ways away. With all this liquidity building up, this green box, which actually I need to color that red, because when people buy here, they put their stop losses down here. Well, their stop losses are sell orders, right? Banks need sell orders to fill their buy orders. So I kind of drew it out already, but yeah, that's basically what I would like to see happen if I'm trading on a higher time frame basis, which I actually need. Well, I don't have an alert on it because again, it's neutral right now. So that's a higher time frame play. Just looking down to some of these smaller time frames. Yeah, just more sideways junk, to be honest. But we do have, was that 15, I think? Yeah. So we do have a zone on top of a zone. So it looks like it pierced through this first zone here. Looks like it pierced or touched into the bottom zone, which is the closest, it is closest to the origin of this strong move up, this more recent move up. Not really getting a whole lot of divergence on the aspect of RSI, the relative strength index. So it's not really helping this out. So it could potentially just wick right through it. I'm going to delete that one up top since that's old news. But yeah, I mean, we'll see. I mean, you know, I wouldn't necessarily be getting into this trade because, again, it's already been touched. It went up, and you do have a supply zone to fight through. Okay, if you were to get in right here, I don't think it's a super strong, significant supply zone, but it is a supply zone nevertheless. Then you do have another supply zone up top here that could potentially have some ask orders in there. So just, you know, one of the first things I do when I'm looking to buy and demand, I always look overhead, see where the potential is for trade to go against me or, you know, reverse. So you got one there, and actually you got a third one. So there's a few supply zones you have to fight through. Potential. Okay, there's another supply zone. Fair value gap, a little bit of a fair value gap underneath all three of those supply zones. But yeah, I mean, you know, it wouldn't have been the worst thing in the world to get into this trade. I mean, you might still could. Let's see if this 15, let's see if we have a demand zone that formed. Okay, so look at this. So now on the 10-minute time frame, you actually have another demand zone, which is currently bouncing through. This zone had a pretty good fair value gap coming out of it, or acceleration gap, as Coach Richard calls them, right? So that yellow represents the space between this bottom candle, the top of the bottom candle, and then the bottom of the candle outside of the leg out, right? So that's a good strong movement right there. A lot of people like to buy the fair value gap itself. So fair value gap traders got into a nice trade right here, right? Richard and I have talked about this several times. Fair value gaps on their own are pretty strong because I miss a lot of trades that come down close to my demand zone or close to my supply zone. And it's usually the fair value gap traders that won out, right? So sometimes the fair value gap wins and sometimes the zone itself wins. So
it's also like at least the demand zone that you have there, the fair value gap sort of like confirmed the move after reaching the demand zone. The first one, right? After that first
yeah,
move.
exactly. Yeah, I mean, so, you know,
credibility to the area, right?
Yeah.
But
Yeah,
I mean,
exactly.
fair value gaps acceleration gaps can also occur all over the place, right? So I generally want to see a bit more than just the fair value gap on its own.
Right. Yeah. It's an odds enhancer, right? Not necessarily the end all be all, but you just add it in with other, what I call odds enhancers, just to add as many probabilities in your favor as possible. Yeah. And then, just looking at it on 5 minutes, there's a 5-minute demand inside of it as well. But again, it's already bounced, right? So it potentially already made its move.
Right. Yep.
You got another little 5-minute zone up here you have to worry about. But if you're brave and have a tight stop on this thing, you took it on a 5-minute, or limit order. Well, you're probably looking at 5 pips spread, 5 pips of range, and it's already went 11 pips, so it's already given a 2-to-1 trade. So yeah, probably too late on this one.
Yeah.
Been mitigated 3 times
I
now.
think it wants to break. What was that? That low that first went into that demand zone. When was
This
that?
one,
Friday.
2:30. 2:30. So 30 minutes after London session
Not
opened.
that one. Previous one. Previous low.
This one here.
Yeah. That was
Oh,
Sunday.
okay. Yeah, that would have been
Yesterday.
Sunday 23:20. So that's 11:20 p.m. my time here in the States, Central Standard Time. So hopefully that helps, Nigel. There's just not really any immediate area here. Now, if you look a little further back on a 5 minutes, there is a demand zone down here as well. So that could be a potential play. You did get a little bit of an acceleration gap, fair value gap, up gap, novice gap, whatever you want to call it, right? Coming out of it.
A novice gap.
Yeah. So that, and here's the beautiful thing about that zone. Now that I look a little deeper, so you got this triple bottom that's kind of forming just in this immediate leg. Okay. Again, you got people buying, right? They're putting their stop losses below their buys, right? So they're probably putting their stop losses down here in the middle of that demand zone. So the banks need the sell orders to fill their buy orders, and then unfilled orders as well. So that could potentially be a play, right? Just technical only basis. And then you still got this supply zone or this supply zone or this supply zone to work through. So that could be a potential play right around the 147.32 level.
Mm-hmm.
That supply, that demand zone was pretty nice because it pushed price a lot better than this leg pushed price. And this is kind of in the context of a little bit of an overall, right? A little bit of a downtrend, lower lows. But this one here, that had the strength to push price a good 50 pips or so. So that could be a potential play. I won't take it just because it's neutral on my fundamental analysis. But if you're a technical only trader, perhaps. Now, again, just keep in mind it's a sideways trend. So if you're going to buy a sideways trend, at least buy as close to the low of that range as possible, which I guess that would be a little closer to the bottom, right? If we're just looking at this immediate leg, this kind of sideways price action, right? So it's a little bit lower. It's on the lower third, I guess, pretty close. Just depends if you go from there to there or whatever. At least you'd be buying on the lower third of it, right? So hopefully that helps. I just think there's a lot of other better plays out there, personally. But you do what you want, my friend. Hope that helps.
Until after Wednesday.
Yeah. Wednesday's going to change the game for us all. It really is.
Yes.
A lot of sideways, wishy-washy type of price action may be very frustrating. I don't know. Will not surprise me.
Yeah.
But thanks for Nigel for us asking to have a look at that. Is there anything else you guys want to have a look at? In the chat, let us know. Tiger, I just want to quickly announce that we want to be giving away another 5K Forex Challenge account today during this session, right? So if you do want to stand in line to be today's winner, please make sure that you subscribe to both our YouTube and Instagram handles, and that's for both our Hola Prime TV and our Hola Prime Global accounts, right? Keep on commenting during these live sessions. And thirdly, very importantly, make sure that you link your email to your YouTube bio so we can actually get hold of you with those account details, right? And to get you all sorted up and set up. So we'll be giving away 5K Forex Challenge account a little bit later during this session. If we don't find a winner, then probably during the pre-market session. I believe there might also be a futures challenge account up for grabs today as well. But let's see how that goes. Again, guys, if you've not won before, you would like to win, please make sure that you follow those steps on screen right now. And who knows, maybe you'll be today's lucky winner. Cool,
Good
cool.
stuff. Good luck. Good luck, everybody.
Good.
Yeah, I'll just show a couple more of my top alerts, and then I can definitely pass it back over to you guys. Did want to cover gold and silver real quick. So gold, Zagnut. Now here's Zagnut over here. Right. Where's my Zagnut? There's Zagnut right there. Right. XAG USD. That's close enough. ZAG NUT. Hey, here. Come here. Got something for you. Oh, you got something to munch? I love that movie. I love that freaking movie. So we'll get to Zagnut after gold. So yeah, as far as gold goes, kind of the same thing. You got a 5-day sideways price action, right? If we're just looking at the last few days. There's a couple options in here though that I'm looking at. Do you have this little 4-hour demand down here? With a 1-hour demand at the bottom of that 4-hour demand for the confluence I like to see. I kind of colored it in already, but there's that yellow fair value gap on the top of the proximal line of that 1-hour demand zone. Obviously going to the second candle after the bottom. So a little bit of inefficiency in there. That's real strong. I wouldn't be buying at the top of the 4-hour demand. I'd be waiting for the 1-hour demand. So I've got my alert above the 4-hour, but I just want to be able to monitor it on the way down just to see what happens. So that's a little bit more of a longer term play, but in the more immediate term, so I colored a 1-hour demand, which I didn't really like the strength of it because it did bounce into this overhead supply. And as you can see, it turned around. So rather than jumping on the 1-hour demand, I was actually looking at the 15-minute demand inside. And as you can see, it did hit the 1-hour and kind of ran off about a 1-to-1. So it hasn't yet touched the 15-minute. I'm kind of thinking that's probably not going to be my favorite play because we didn't get price to break any of these recent highs over here. I mean, it broke that one right there, but I would have preferred this zone to break some higher highs. I'm real picky on my zones. They have to show me that they're strong. If they're not strong enough to push through some highs or push through some overhead supply zones, then I'm typically just going to pass on them. But, you know, so far it's gotten at least a bounce off the 1-hour. Now that doesn't mean gotta be strong. We must be strong. Carry on. That's right. So yeah, I think at this rate, I'm just going to wait on the 4-hour demand. We do have a daily demand below it, the yellow box there, with the 4-hour demand inside of it for confluence. So that's my favorite zone. But we do have this nice little zone as well. So keep an eye on this one. Again, on the 1-hour. If that fails, I got a zone waiting below it that's stronger, in my opinion. Obviously, the volume spread of analysis candles are a little better. Yeah. But I'll see. I'll have to. This one I'm going to be picky on up top. I want to see that bullish engulfing candle with a wick on the bottom, 3x, 4x, the volume spread analysis range. I'm going to be all kinds of picky. So this is my tip my toes into the cold pool water in April, and this one down here is the July cannonball into the pool when the weather's hot, right? Probably put a limit order on this
one. Week, it will pay off to be extra picky, right?
Exactly. But yeah, both these zones look nice because you do have this little double bottom. So there's going to be stop loss orders below, sell orders the banks like. Collect sell orders, collect one of these zones of unfilled orders before pushing up. So that's still my favorite play on gold at the moment. And then finally to the other shiny metal, silver, Zagnut. Got this nice demand here. on a 4 hour. It looks like I just didn't color it. I must have colored the 1 hour. Okay, so we got a 4 hour demand here. Got a 1 hour demand inside, showing a little confluence. Okay, we got a 30-minute demand inside as well. And I'm sure we'll probably have a 15 and a 5. Yeah. Okay, 15 minutes. See what the 5 gives me. And even a 5 minute. Okay, so we got confluence with fair value gaps all the way throughout this 4 hour candle. We had the 4 hour, the 1 hour, 30 minute, the 15 minute, and the 5 minute. There's a demand zone inside of all those time frames with a fair value gap showing strength. So that is an awesome range right there. Put my stop loss, regardless of which one of these I take, whether it's the 5 minutes, 15 minutes. I'm just going to incorporate the whole zone and obviously put a stop loss below, right? Just give me a stop loss down here. And that'll be, silver's probably got my favorite technical looking play right now, to be honest. Again, if for some reason, well, the COT report kind of changed some things around. But that's, in fact, what did it give me? I need to go look. What did silver do on the COT report? I didn't even see. Where's my report at? I got too many screens on here. There we go. Okay, so silver gave, okay, so minus 0.42%. So the banks basically got rid of 30 short contracts, but they also got rid of 2,000 long contracts. So still net long overall. Gold and silver at the top, by the way, of the COT positioning report. So still net long, heavily net long, 80% almost on silver. Gold's 83% net long. So these are the top two longer time frame buys from the banks. But we did have a very slight decrease on silver this week. So that's really the only reason that it dropped off of my top setups page. But I like that zone. I think silver is going to be going more or higher up. So I'm definitely going to stick with that demand. You got this consolidation here. And you got all kinds of confluences showing strength. I love it. I love it. So yeah, just a simple pullback to the zones there. And then I'll be off to the races. Now it is pretty high up. It's obviously pretty highly priced. And if you look at the RSI on gold and silver, I actually changed my lengths on these. I like to do a length of 4. Okay, it's just a little cleaner to see overbought and oversold. But yeah, I mean, we're in oversold or overbought territory on gold and silver, but that doesn't mean squat. Because if you go take a look at all these recent times gold was overbought, just because it's overbought doesn't mean we got a reverse, because we didn't get a reverse on any of this stuff. Okay, here's overbought, and it still kept going up. Okay, overbought, and it still kept going up. Let's go over here. Overbought and just flew up. Here's another one. Overbought and kept going up. And we did get a pullback, but then, yeah, all these overbought spots didn't care. Market just kept going up and up and up and up. So just because I know there's a lot of traders out there that like to, catch falling knives and from going up just because it's overbought and oversold. But
oversold areas during a strong uptrend were way better buying opportunities.
Way better. Yeah, exactly. Yeah, we get an oversold spot on gold and looks like it's been working pretty well for you. But as far as this long-term uptrend, right, it's just been a rocket. So stay out of the way of trying to sell this market.
How high can it go?
Exactly. It's going to the moon. To the moon, I say. Silver, same thing. All right. Good luck trying to short that market. You might have gotten lucky in this area, right? Might have gotten lucky here, right? Liberation Day. Where was that at? No, well, not on this market, but yeah, it's just don't ignore overbought and oversold, but just be aware that just because it is doesn't mean it has to go the opposite way. So that's pretty much what I'll say about that, especially with gold and silver. It just works a little different, regardless of what your settings are on your RSI. I mean, if I go back to the standard 14, then it's, kind of the same thing, right? Just got to be careful with it. So, but again, I like to put my setting on 4. It just makes it a little cleaner as far as the readings go. Bitcoin, I wanted to point this out. So, Richard, I couldn't sleep Friday night into Saturday morning, and I can't remember if I told you guys or not, but I ended up getting into a trade just for kicks. Where was that at? Because I wanted to say that I wanted to finally say I placed a trade on the weekend. Actually, I think it'll be over here. Be better. Bitcoin.
Dabbling in cryptos.
Yeah. Where's my Bitcoin? Oh, here we go. Yeah, here we go. Yeah, so Bitcoin, I was just kind of playing around with this. Obviously, uptrend over the last couple weeks or so, 2.5 weeks. Did observe this supply zone overhead. I think it was a 4-hour. Yeah, so we had this 4-hour supply zone. Get rid of some of these old drawings. We bounced into that supply zone, and going down to a smaller time frame, just looking at inefficiencies in the market. That's all I did. But I found this one on, I guess it was probably a 30-minute. Let me look. Or was it a 5-minute? Well, I can't remember the time frame now. Well, either way, I found this supply zone. Yeah, right here. Yeah, this was about the time I woke up. I'm like, it was about 4 a.m. I just couldn't sleep. And so I got up. I said, well, let's see what Bitcoin's doing. Oh, so it bounced into the supply zone. It's pushing price down. It formed another supply zone. So I ended up getting into this trade, made about $280 on this short. Nice. And I bought to cover just ahead of this demand zone. And I was almost going to buy the demand and take it the opposite way since it wasn't an uptrend. But I didn't want to press my luck too much. I finally got sleepy, so I let it go. But yeah, things not to do when you can't sleep. Sometimes it's trading, but I decided let's just check that one off my bucket list. So there, I made $280 on Bitcoin on the weekend. I'll probably retire 1 for 1 on the weekend. 1 for 1, 100%.
Well done.
I know. I don't want to let that success go to my head, though.
Nice.
Good morning.
Yeah,
Good morning.
Nigel's saying
gold
is just bouncing back and forth.
Yeah.
There'll be a lot of that until Friday. Well, not Friday, Wednesday. The interest rate decision.
Yeah. That's all you see on the screen, just sidewaysness since last Monday, a week ago. Mm-hmm. So, that's why I like the higher. That's why I like the higher time frame zones below, because this is all just chopping people to pieces right here. Because overall, it's an up market. Yeah. You got people trying to short; they're getting ran out. You got people trying to buy. Right? It's not going anywhere. I just want to get out of this price range and find an imbalance down underneath all this mess. Obviously, no interest in selling the market at any point, but I just need a discount. So patience pays off. It can pay off if you just wait for one of these higher quality areas to buy. Again, whether it's that one there, fair value gap, or that one there with a big fair value gap.
Mm-hmm. Mm-hmm.
There's the fair value gap on that one. But yeah, that's pretty much my main alerts at the moment. And
Thanks, Tiger.
if y'all have any things you want to show, let's check it out. And I'm going to look at some small time frame zones, see if buy or sell.
Yeah,
Somebody's
Alex, you want to go ahead, or can I share my chart? Go through my markets. Can do that as well. Yeah, back in. Cool. Thank you very much. So, again, looking at gold here, just a quick recap of what we've been following, or I've been following or tracing gold and price action wise. Since we started these Forex Fire live sessions, I had the idea that we were moving sideways, or gold was moving sideways in a triangle formation. And we did actually track this until I believe it ended. We had this move higher. There were some instances where I had to change the labeling a little bit around as price action, did its thing. So trying to keep on top of what was happening. And then we had this breakout, obviously, right? So I'm still viewing the low on the 30th of July, obviously this year, as the end of that triangle. And then with this being the next phase higher. Now, next phase higher, I would like to see 5 phases or waves, as some might call them, out of that low. And just looking at the price action during this very impulsive, strong, bullish behavior that we've seen from what I labeled a second wave low, it just was reminiscent of how third impulsive waves typically behave. You've got very short little pullbacks during the impulsive move, and we've certainly had that. Then since, when was this? This high on the 9th, price started moving sideways, and I've mentioned that as soon as we're going to get a situation where price is going to move sideways for an extended period of time and not having these little small pullbacks, that we might actually be seeing the fourth wave of this impulsive move, and that the third wave potentially is in, right? And it's starting to look like that. And I wouldn't be surprised if we're forming another small triangle here, a lot of sideways movement, or get a combination corrective structure lower, maybe a double zigzag, taking us into Wednesday. And then when that interest rate decision gets released, then we'll see what happens. I mean, obviously gold will do what gold wants to do. All the markets will do what they want to do. Is it going to go up, or is it going to go down? Right? Anyone can make that guess. But I'm still thinking that we are busy with either this third wave or it has potentially completed. And I'm just talking about this phase higher here, guys. I'm not in the overall bigger picture. I'm just trying to track this move to the upside, trying to figure out where are we within this phase. Is there more bullish upside potential? Are we looking at potentially a little bit of a deeper decline? I'm very neutral this week, but I still do think that we're not done with this move to the upside. Now, whether this happens before Wednesday, whatever the case might be, who knows, right? So just my 2 cents worth. Still think that price has got the opportunity to still hit this upper sloping red warning line of my pitchfork. Alex, you've probably seen some of this during the recordings, because it's the first time you and me actually sitting together during these sessions. But I kind of like to frame price action within the confines of market geometry, bit of phase analysis, pattern analysis. Really just trying to, in my mind at least, come up with a few ideas of where price is within a bullish market. Are we in a corrective structure? Clearly, we are in a corrective structure at the moment. So, and then looking at pattern analysis within the confines of these pitchforks, I can sort of normally get a good idea as to whether this moves over or not. If this is corrective, for example, where might price move back towards? Find support from an angular support and resistance perspective, rather than your horizontal support and resistance levels that most traders look at. So I'm still thinking that maybe this is still the third wave, but this is like some sort of a fourth wave correction within this third wave. Then it'll move lower and then it'll move higher. Again, I'm not trying to predict that. We can clearly see that we're moving sideways, as Nigel was saying there in the chat. Very messy price action. It's just starting to look a lot like, if you do crunch this up, like maybe a little triangle formation, right? A baby one versus this massive multi-month one that we've had over here, right? They typically, when you see multi-month triangular formations in basically any market, they typically are your penultimate corrective structures prior to an important high or low. So in the bigger scheme of things, I think that this was some sort of a fourth wave correction that ended here on the 30th of July. And your fourth waves will actually end where the E wave was, or the after the 5-wave sequence that these triangles typically trace out in. All right, so now whether that is like a super grand cycle or grand cycle or whatever your electromaticians try to call it, I've got no clue how to actually label that correctly. I might even get flack from a lot of traders trying to tell me that these numbers should be of a different degree. I mean, look at all these different names for them. I mean, I don't even know what's going on there. I'm just labeling so we can see nicely clean on the chart what it is I'm seeing. Again, I still think we got more bullish potential, pretty much. But that we'll have to watch out that if price hits this upper red warning line, they typically are very strong resistance levels, angular resistance levels during strong trending moves. And quite often you'll have your third waves or even fifth waves terminate at those areas. Later we can have a look at some examples that already played out, and just over and over you'll see how these red warning lines during very strong trending movements typically act, as I mentioned, as very strong support resistance. Right, so I'm still seeing some upside potential here. If we have to switch to a smaller time frame, I always ask myself, if this is corrective, then which corrective structure are we potentially dealing with? Now, the most common one, you probably hear me say this quite often, is a zigzag pattern. So let's say in this case you have a bullish move, and then you have an ABC, or they call a zigzag, and then a continuation higher, right? If that is the case, then we had a move higher and a zigzag lower, and then maybe price is now getting ready to do this, right? Alternatively, if price now, and also considering that we're heading into that Fed decision, rate decision, think it's a little bit premature to think that this ABC completed, right? Because we didn't have liftoff here again. This whole movement here, to me, stinks of another corrective structure, in this case upwards. And I was mentioning this last week. You generally get little triangles during fourth wave corrections, and not never, but very low degree that you get them through during a second wave or a second phase. Generally, a new trend, let's say this was a zigzag that ended there, that might be your first wave. Higher or phase, then you'll have something like this, and then you want to start seeing that impulsive continuation back upwards, right? I shouldn't have done this. Let's just draw that last piece there. So that'll be a 5-wave sequence of whatever degree and whatever time frame the case might be. But this structure that we've seen here last week, as I mentioned, looked a lot to me like a triangle. And again, I'm just trying to look or follow price action behavior and try to see where these patterns generally fit in within these phases. And this to me looked like a little triangle, right? And since I then know that these triangles typically don't occur during your second waves, so like if this was the first wave, then the triangle actually ended here, and then we had another move up. We didn't get that expansive move back upwards, like a third impulsive move would do. So if this turns out to be a triangle, I might be seeing things that's not really there. That happens quite a lot. Maybe that is from, getting all those head injuries when I played rugby when I was younger. Whatever the case might be. But this could be an ABC itself. And price is now doing this. Again, I'm not really going to break my head and trying to figure out exactly what this is, since I'm just pretty much going to let price action tell me, and not really wanting to trade gold until that interest rate decision comes out, right? So again, we're looking at a smaller time frame. I was on a 4-hour or daily previously. If we had to look at this move lower here, yeah, it still looks like an ABC, maybe an ABC back up again. And once you start seeing this, it could be that we're just dealing with a smaller triangle here. And it might even have a bearish outcome. It might be an ascending triangle. It might be many things, right? So my only issue is trying to trade gold, a market that's going to be heavily affected by the interest rate decision. Good luck. If you're not scalping this, for me personally, I'm not saying you should scalp, or not at least, trying to day trade this intraday. You're going to have a lot of this just like stops in the middle of nowhere, reverses, stops in the middle of nowhere, reverses, until that interest rate decision comes out. And it's just, for me, rather dangerous trading this at the moment. The other pattern that we might be seeing here, if this isn't a triangle, this is actually my second go-to pattern. If this wasn't a zigzag and we got another move higher, then maybe this is turning into a double zigzag, right? To take out that first zigzag low, giving us one zigzag conjoined by an axis with a secondary zigzag to follow, and then we get a move back up again. So a lot of speculation here. If this, then that sort of stuff. Plan A, B, C, D's, and E's, whatever the case might be. I don't know. And I'm actually pretty comfortable in just saying I don't really care until the interest rate decision comes out in gold. It's just because I think it is going to be heavily affected price action by that decision. And I mean, gold is a market affected, if I can say it that way. So I think it's just going to be a lot of nonsensical up and down movement until then. So perhaps not a market that you should be trading, but that's up to you. Obviously, that's just what I'm going to do. Again, if I want to trade this, I'm going to want to be in it and out of it on the same day, and not try to swing trade gold at all. I would ideally, like you were showing, Tiger, want to see a move lower, maybe A, B, C, X, something like this, at least into an area that's still, part of this upward sloping pitchfork that I've had in my chart since that breakout to the upside. And these areas make really good areas to try to get into a trade from an angular perspective. Angular support and resistance, right? It might not be this low, but obviously it would be great if we can get that low. Right, so that's my view on gold. How are we doing? We've still got about 15 minutes until the end of our session. Oh, not end of our session, before we take our mid break, right? Jeez, what am I talking about? Alex still needs to show us his chart. Now I'm already ending this.
You're not wrong.
Right, so that's my view on gold. So I'm very neutral. Don't even talk about WTI. I mean, Alex and Tiger and Michael generally call this the naughty child. Very, very difficult to trade as of late. Well, actually, for a long time, I used to trade crude oil, day trading it for a very long time, but it's an absolute mess. You got these V-shaped tops, bottoms. It's just insane. But anyway, as you were saying during your news, did they not, drone attack? Was it the Ukraine
Yeah,
or Russia?
yeah. Ukraine
It's
threw
probably the
more
spike back
more
up.
drone strikes.
But I think we did a good job last week trying to figure out where this move was in that phase higher. And here we have a beautiful ABC double zigzag. The thing is, it is technically not really confirmed, because if this was a corrective structure, then price would need to take out this low, or at least make a double bottom. And I can't really call this a double bottom. And I looked at the CL futures chart as well. Price also fell short of breaking these lows. It doesn't look like a double bottom. Double bottom, at least within a few pips or ticks, should sort of fall within the same level. Then we had this very strong move up. Obviously, not technically driven, but, what should we say, war driven?
Yeah.
News driven, whatever you want to call it. So a very strong move back up. So this sort of like threw me off a little bit. Yes, like I was expecting this to be broken. What is going on here? That high, I was in a trade actually last week Friday, if you guys remember that, Tiger.
Yeah.
And I was like sort of wanting to get short, and then all of a sudden we had a strong reversal back up again. And price actually came back, and I got out at break even, so I didn't take a loss on it. But I was very close to taking a loss in that trade. And luckily, I got out, and I wanted to go home a bit earlier than I normally do, but then I had to sit with being scared by crude oil's price action during this relentless strong push back up again. So, yeah, maybe just move on. I don't know. Crude oil will probably also do its thing during that interest rate decision. What else do we have? FTSE. Oh, the NASDAQ.
FTSE.
The NASDAQ behaved pretty well. This was the pattern that I was tracking for some time here. Also an ABC, although in this case it was a ABC flat. So, or running flat as they call them, where your C wave doesn't actually extend below your A wave, still giving you an ABC. Confirmed this time because price then took out the all-time highs, and again it's now back at all-time highs. NASDAQ preferred to trade that during the future session and not really during the London session, just because of more volume, volatility and all that sort of stuff creeping in during that time. But again, just from a pattern analysis, this is typically what I would do, trying to figure out where price is within, and obviously clear as daylight to see prices in the strong uptrend. But as soon as we do get a corrective structure, I like to track those structures and figure out where they might end. With running flats, it's just near impossible to figure out where the C wave will end. You will only know that after the fact. In this case, when price take out the beginning of the corrective structure. Because C waves generally on a zigzag will break the end of the A wave. In this case, it didn't. It's a bit of a sneaky pattern, but it is what it is. Maybe that's a similar thing we're seeing in crude oil. We had that move lower, price moved up, it sort of fell short of it, and now it's making its way back up again. Different market, obviously, but it doesn't have to make a double bottom. In this case, it didn't either. I also looked at the MQ on the future side and came very close to breaching that low that was set here on the 20th of August, but also didn't. So again, a running flat occurred on the NASDAQ, in my opinion. Then let's have a look at the FTSE. FTSE 200.
FTSE.
UK 100. Here we have that situation. During these sessions, I've been tracking this phase of upside. Again, there's obviously way more bullish price action prior to this, but I'd really like to start my phases, or the next phase, what I believe might, in this case, head higher after a corrective structure, right? In this case, I counted it from here. So we had a 1, 2 internal 5-wave sequence to complete the 3. And Tiger, remember we were looking at this expanding triangle formation that was taking a whole day. That was actually the end of my 4th wave. And then somehow force 5 waves into this to complete the 5th wave. Then expected a deeper decline, which we got. It's weird, yeah, on the UK 100, we didn't print new highs again on the all-time highs. So after a very strong decline here, it is very difficult for me to try to force a zigzag behavior into this movement lower. But it is obviously possible. But I'm still thinking the possibility also exists that we could see this.
ABC.
Higher at the latest. Right, so quite often after a 5-wave phase sequence, you'll expect a deeper decline. We have got a bit of a deeper decline after that 5th wave sequence, but again, I can't see, it just looks like one directional move lower, which tells me that we could potentially still head lower again. Obviously, invalidation would be if price would take out the 22nd of August high, leading me to then completely scrap that idea that this is a 5th wave, my analysis being wrong, which it often is, and then just move on, trade something else instead.
Yep.
Then you'll see, Tiger, that I've started adding quite a lot of Forex pairs to my arsenal.
Hey, he's joining the dark side with us, Alex.
Love it. Love to hear it.
Just trying to look at some more opportunities here, especially with the Aussie in the room today.
Yep.
It being so strong on your sentiment list, maybe it's time for me to start delving into some other opportunities. Maybe this will probably be a good thing to do before Wednesday's interest rate decision. Maybe just stay clear of your normal ones like the Nazi or the WTI, gold, maybe even Zagnut, until that interest rate decision comes out. Right? So, AUD, I mean, I've been messing around while you were talking a little bit with these pairs, just trying to apply a bit of market geometry to the price action, but clearly still needs a lot of work here. But goodness gracious, a lot of these Aussie pairs were in pretty strong bearish markets, right? And now with them actually strengthening then your list, Tiger, maybe
good to diversify.
you can get at least something like this here. And I'm looking at the Aussie Swiss franc, maybe something like this. Then bearish again, or I see bullish potential. Yeah, it's premature to be drawing this pitchfork because there's no 100% guarantee that this low on the 18th of August. What's in a week? So this is the week of the 18th of August. That is definitely the low. We can't say that for sure. But if you have to look at trading opportunities, I think you were looking at a zone earlier there on the Aussie Swiss as price retested its 50% dash linear line, and they went back up again. What would be of interest here for me is the following: to potentially go long on the Aussie Swiss. So I actually like this chart, although it's premature to, like I mentioned, draw that pitchfork. I want to draw the line parallel to one of my pitchfork angles. Look at the pattern. We had one directional move lower. Now, if price continues lower, maybe it wants to do this. That will be cool, right? Trying to find areas of interest here. This move up here looks like a 1, 2, 3, 4, 5. Maybe we're getting an ABC here now, and do that. That'll be cool. So I'm actually gonna add an alert around about there, crossing down on the Aussie Swiss. Area of interest would be if price were to move lower, actually below this low that was set during yesterday, right? I'm looking at the New York EST time zones here. So, and price might come into this area over there. So that'll be an area of interest for me. Potentially get long the Australian dollar Swiss franc. I can break it down even a little bit more. If this is a small little 1, 2, 3, 4, 5 type of move, maybe that was the A wave. Who knows how you're going to fall zigzagging here, but I would like to see this. I'm more interested in the pattern overall than all of the internal intricacies too much, especially on the smaller time frame. So if we can break this low, Sunday's low, descend into this area, obviously that would trigger my my alert, then I'll be interested in a trade there. But this is what I'll definitely do. I'll swivel a shift pitchfork into the direction of this move. The shift pitchfork is my go-to when it comes to zigzags. Very high degree that you get zigzags complete at either the lower or upper median line of a shift pitchfork, depending on obviously which direction you believe the correction is moving in, or not believe, see it's moving in. In this case, potentially still lower. Then, yeah, we actually got a zone that's much larger than just that. Maybe something like this. Or maybe price just takes out this previous low, just pips it, and then moves higher. That could also be potentially what happens. But let's see.
Yep.
Let's see.
Yeah,
this is
that 10-minute.
If you go long,
That 10-minute zone is in that box. Yeah, that 10-minute demand zone's in that bottom box you drew. So that's pretty much the one I'm looking at. Yeah. Yeah, that wick is just.
Thank you. So yeah, that's the one you were looking at earlier, didn't you? But it was touched a few times, right?
Well, there was one a little higher. Yeah, that. Well, yeah, you can actually see it right there. Looks like it'd be your 12 o'clock candle. It looks like. Yeah, right there on that 1 hour. Yeah, on the 11th.
On the 11th, this one.
Yeah, you get that little. No, down at the base of that move, up a little higher up. Yeah, that red candle before that big spike up.
That one.
Yeah. So that one got hit and worked. Yeah, but yeah, that's the one I was looking at. Yeah, that hit last night,
it could be
and I missed it.
Could be tested again.
Yeah,
price is coming down pretty hard here, actually, so we might get a opportunity soon. Right, guys, it's time to take a break. I don't really have too many other pairs that I'm looking at currently. I just want to deal with some of the questions here. Nigel asking for the US 30. We can definitely have a look at that after our break. And then No Sleep and Rate is asking if I speak Afrikaans and if I'm fluent. Ja, ek praat Afrikaans. Dis my eerste taal. Engels is my tweede taal, so ek is fluent. I speak so much English that I sometimes forget my home language. So.
Well done.
No Sleep narrator. Where are you from again? Aren't you from Namibia, if I remember right? Or are you from South Africa, Cape Town area yourself? I can't remember. But yeah, I'm Afrikaans, first language. English second. Speak a little bit of Spanish.
Oh, that's cool.
As fluent as Tiger.
Well, I wouldn't say I'm fluent.
Alex,
yeah. I think Michael's a little more fluent.
Other than Aussie?
No, I don't. I'm learning German right now, actually. I'm doing classes to learn German, so we'll see. Not fluent, nowhere near it, but check back in a year. Let's see what happens.
Okay.
German I understand, but I can't speak it. I understand it sort of, and maybe because of the Afrikaans background. But I believe my descendants that came to South Africa were German, so there's definitely some
Makes
Yeah.
sense.
blood link there somewhere. Yeah.
Yeah, me too. German and Swiss on my
Guys.
behalf.
Oh yeah,
Yep.
you were saying, yeah.
German.
Cool,
Yep.
cool. Right, peeps in the chat, we'll continue with the analysis, hopefully get some trades going after our little break. We're going to take a 15-minute break, so please do stay tuned. Remember that we also have that 5K Forex Challenge account to be given away a little bit later, or at least we want to, so make sure again that you do follow those steps in the chat there. I'll repeat it a little bit after the session as well. So 5K Challenge account during our session, hopefully, or a $25,000 futures account during the actual futures session. Again, all winners will be selected live, but to qualify for today's giveaway, you need to subscribe to both the YouTube and Instagram handles on both our Hola Prime TV and Hola Prime Global accounts. Keep commenting during these sessions. We actually go and pick names that's commenting, right? Otherwise, we won't know that you're watching. And then when we do pick names, once we obviously see names that's not on the list that won previously, we'll go in and see if you actually linked your email to your YouTube bios so that we can actually contact you with account details. Follow those 3 steps and you could be today's next winner. Right, guys, we'll take a quick break. We'll be back shortly. Don't go anywhere. And from my side, adios.
All right, we'll be back.
Hey, hola amigos, I'm Michael Keller, and I'm one of the trading coaches here at Hola Prime.
But more importantly, I'm just a regular guy who turned trading into freedom, and I'm here to help you do the same. So this is a glimpse into who I am in front of the screens and beyond the charts.
See, a strategy will get you in the trade, but mindset keeps you in the game.
I started trading back in 2012, and honestly, I lost more than I won in the beginning, but every loss taught me something. It wasn't about having the fanciest indicator. It was about mastering my mindset.
Living in Mexico has taught me to slow down, breathe, and be present.
Trading is what I do, but it's not who I am. I'm a dad, a husband, a traveler, and a student of life. And all of that makes me a sharper trader. When I'm in flow outside the charts, I'm in flow on the charts too.
This game doesn't reward speed, it rewards skill.
Listen, everyone wants to flip $100 into 10,000. I get it. But be consistent, focus on execution over excitement, risk small and learn fast. And if you ever feel lost, reach out. That's what we're here for.
Well, guys, that's a glimpse into my life, my story, and who I am, not just in front of the screens, but beyond the charts. I hope to see you in the session soon, and let's grow together. One day, one trade, one lesson at a time. Welcome to Hola Prime.
Hola Prime, trade with transparency.
Hi there, my name is Richard and I'm one of the coaches from Hola Prime. Join me as I take you behind the scenes on a little tour of what I like to get up to on a daily basis and beyond charts. I started trading 16 years ago, but through persistence and a very high level of dedication, I got to learn 3 invaluable lessons through my career. That trading should be treated as a business. It's really not a gamble. Consistent profitability demands effort, and there's really no shortcuts or any way around. And especially risk management, which isn't, it's part of your survival as a trader. You see, early on I realized that success in trading is only 20% strategy and 80% mindset and emotion. Now, as a coach at Hola Prime, my focus is very simple. Helping traders build systems with an edge, cultivating the discipline and focus needed to execute them consistently. You see, guys, the markets doesn't care about you. It will humble you if you let your pride override rules, and reward you when you execute your plan without fear or hesitation. As a trader, I like to get outdoors as much as possible. Really try to strike a balance between trading and also leading a healthy lifestyle. Leading a healthy lifestyle for me could be anything. Hiking, I love swimming as well. Today is not really the weather to go and swim, but I will take the dog out for a walk. I'm really trying to force healthy habits so I can stay focused when I really need to, when I'm behind the charts and all the stresses that comes with it. As getting outdoors really helps relieve those stress and helps me personally keep focused as much as possible. In my spare time, I like to play league darts with my friends. And just as in training, skills and practice is everything. And that's a wrap, guys. Look behind the scene of who I am, what I do every day, beyond the charts. I hope to see you in the session soon. Take care.
Hola Prime. Trade with transparency.
Well, hello everybody. My name's Tiger. I'm a coach here at Hola Prime, and I wanted to give you a quick little glimpse into who I am, both inside and outside of trading. So let's check it out. So I've been trading now for going on 11 years, and that first decade of my trading was all about technical analysis. And really over the last few years, though, I've really dug a lot deeper into fundamental analysis and sentiment analysis, seeing how the bigger banks and institutions are trading so I can ride their coattails, so to speak. They're the ones making the money. So I've just kind of looked at trading like Edison and his light bulbs. He's went through thousands and thousands of different prototypes in order to find the one that worked. Look, one of the things about trading that people get wrong is they think it's an overnight get-rich-quick scheme. So, for me personally, all the hard work was done well before I even picked up trading, and it all had to do with reading some good books. So, one of my favorite books right there, The Magic of Thinking Big by Dr. Schwartz. And as you can see on there, the chapters, best way to read this book is read chapter 2, 12, and 13, and then turn around and read the whole book. Powerful, let me tell you. And I'm sure you caught that above my bookshelf. One of my biggest things that I love doing is bowling. I'm a very competitive bowler. Bowled a lot of perfect 300 games, so they give me these nice little trophies whenever you bowl a perfect game. Got another one for an 800 series, basically bowling 3 games of 800 or higher in a 3-game series, so it's like a 250 average. Pretty good stuff, but competed national tournaments, state tournaments. I've won a lot of them, so bowling, that's one of the top hobbies that I have. Outside of that, I love singing. I like to go and belt some tunes, whether it's karaoke or just singing in my car, some carpool karaoke. But other than that, listen, on the weekends, I love nothing more than just to hang with my girlfriend. She's an awesome, incredible woman, and she kind of balances me out because she sees how hard I focus on trading. So it's just a very good reset at the end of the long, hard week of trading to just get away, just step away from it all, go enjoy each other's time, and prepare for the next week. So that's a bit about me. Just let us know how we can help. Just remember, it's not a sprint, it's a marathon, okay? The basics of trading are quite simple to learn. It's just all the nuances that take a while to really master. So just keep that in mind. Don't overwhelm yourself. We'll take your hand. We'll lead you to where you want to go. Like I say, just one step at a time. So with that, have a wonderful day. Look forward to seeing you in a session soon.
Hola Prime. Trade with transparency.
Hi, I'm James. I'm one of your coaches at Hola Prime. I've been trading for about 30 years. Can you believe it? Seems like an awfully long time. But in that time, I've learned a lot about trading the financial markets, and I've learned the best way to trade the markets. By dawn, I chase waves, chase stocks, and sometimes chase my own sanity. Trading, like surfing, is all about timing. Wait too long and you miss the move, and jump in too early and you just wipe out. If you're a new trader and you're struggling with your trading, I think you've come to the right place. I'm really looking forward to meeting you and helping you with your trading. I'm approaching a stop street now, and I'm going to have to stop. Emergency brake if there's traffic coming. And that's one of the things you've got to learn in trading as well, as how to keep safe. And one of the main things that I teach in my trading philosophy is risk management, which is not taught very often. Trading is a bit like driving a car, really. You've got to have a license, and in trading terms, having a license is like learning how to trade. And once you've learned how to drive and got the license, learned how to trade, you've got to get good at it. And my philosophy is to teach traders how to trade properly using the tools and techniques that they should be using. My specialty is swing trading, and it's a bit like riding the waves. I've been a surfer for a very long time, and swing trading is not much different. You've got to find the sets and catch the right wave and get out of the wave when it's time. A lot of people ask me, how did I get to where I am today? How did I learn how to trade? And how can they get to where I am themselves? I think the best answer to that is to get educated, learn how to trade. And there are all sorts of resources out there for you, including fantastic resources here at Hola Prime.
Hola Prime. Trade with transparency.
Hey, I'm Troy Epperson. I'm one of the coaches at Hola Prime, and this is a little glimpse of me outside or beyond the charts. Outside of trading, I play golf with my son. As you can see, I have a laptop and multiple screens. I've been trading for about 15 years on my own and about 25 years before that, even with a lot of interest in the market. I've realized over time that it's not about the strategy or the method. It's about implementing whatever that strategy or method is, which is super, super important to become consistent as a trader. Everybody wants to get profitable and make thousands of dollars a day, literally overnight. But it's about taking those small incremental trades just over time, taking the same boring pattern over and over again that creates that consistency and develops discipline to make money trading currencies, futures, or stocks, or whatever you're trading. Golf is great because the parallels with trading are immense. Discipline, doing the same thing over and over again, getting your setup correct, knowing when to do a layup and when to actually go for it. All of those things apply to trading. Balance is super important and is the edge when it comes to trading. We want to be consistent, but at the same time, you've got to be patient, and you need to be able to reach out and ask a coach a question and never feel guilty about doing that. And there's no bad question. Every question is a great question because it helps you enhance your intelligence and your knowledge of the market. Well, that's a bit about me. I hope to see you soon in a live trading session. And remember, we're just looking for one good trade. And once we find that one good trade, we're going to do it again and again and again. I'll see you then.
Hola Prime. Trade with transparency.
Hi, I'm Adeline, one of the coaches here at Hola Prime. But don't worry, I won't make you do endless push-ups unless you are up for the challenge. I'm here to help traders build discipline, strategy, and confidence in the markets. And here is a little glimpse into who I am beyond the charts. I've been trading for 4 years, and it's been the most humbling teacher I ever had. At the beginning, I used to chase quick wins, but I learned quick losses hits hard. Trading isn't just charts and numbers, it's a mirror. It showed me my patience, my fear, my strength. Protect my capital and let the patience pay me. Because guess what? In trading, your biggest edge is you. Markets are intense, but it's just like an ice cream on a hot day. It can get messier, but it's always sweeter when you approach it with the right mindset. Enjoy the process and savor the small wins. Off charts, you can find me recharging by the beach, traveling to new places, or hanging out with my pets. I love staying active, but I also enjoy good food and music. Balance is the key. That's a bit about me. Don't forget, life is too short for just work and no play. Yes, even in trading. I'm here to guide you, cheer you on, and make sure we have some fun along the way. So hope to see you in a session soon.
Hola Prime. Trade with transparency.
Hi, I'm unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets.
What's up? What's up? We are back. Welcome back, everyone.
Yeah.
Tiger's still munching away there. He's Zach nuts.
I wish. No, my Nutri-Grain bar. Sorry, I'm going to scarf it down real quick.
All good. All good. You do your thing.
I got to put something on my stomach after I took my vitamins. Don't need that messing my stomach up, right? On an empty stomach. Right.
Good stuff. Maria was asking, I completely missed that. Good morning, Maria. Thanks for joining again. What are you guys looking, or what am I looking for in gold today? Maria was pretty much very neutral. Still thinking we're busy with some fourth wave correction. It's difficult. I mean, you already took a little short by the looks of things during the Asian Open. Got a nice small trade. Great stuff. Yeah, I think what I was trying to say during the actual analysis, Maria, which you missed there, was yeah, all that very short-term goals and gold until you know, the Fed rate decision. It comes out on Wednesday. So yeah, it's a difficult one. It's gold, as you probably know already, is going to probably be heavily impacted, or not. Who knows? We'll see how things go. Maybe they're backed it all in already into price action, whatever the case might be. So we'll see. Yeah, Nigel, gold is bouncing back and forth. And Michael, hello, let's go. Right, guys, before we pass it back to maybe one of you guys, I just want to quickly mention again that we want to give away 5K challenge account during this session. But it's all dependent on who follow the following steps on, it'll probably pop up on the screen right now. There are lots of winners already here in the chat, but there are a lot of new names as well, so which I don't recognize. So if you guys want to win one of these challenge accounts, we're going to be giving either the 5K challenge account away during this session or the pre-market session. But there's also a $25,000 futures account up for grabs a little bit later, right? So if you want to win that prize, you haven't won yet, make sure that you subscribe to our Hola Prime TV and global accounts, and that's on the YouTube side of things as well as our Instagram handle. Keep on commenting during these live sessions, and number 3, very importantly, make sure that you link your email to your YouTube bio so we can actually contact you. We'll be basing our decision on who wins these prizes on who follow those steps, right? So we can see who's in the chat, and we'll go into a name. If your email is linked to your YouTube bio, then you follow the steps, and congrats, you might be today's next winner. So please do stay tuned. We'll let you guys know if we decided on a name, again, dependent on who followed those steps, and we'll let you know. We normally do it around about, what, 6 a.m. Central, Tiger? So if we do have a name that followed all those steps, then we'll let you know very, very soon. Cool.
Perfect. Well, I've got my screen up now. I think it's my turn to give my analysis.
You got the last 2 hours.
Yeah. Wow. 2 hours. I'll try. I'll give it a go.
Just picking on you.
There's a few guys in the chat actually from this morning, which I'm seriously impressed about. Saw them originally with you, Coach Tiger, and I think there's one guy in here that I saw. Don't know if he's still around, but welcome back. It's been quite a big day. Starting off the day early in the morning here at my 7:45 a.m. and it's now 8:20 p.m. and we're still going with a full day of trading. So absolutely love it from here. Got to meet some few cool coaches as well. Not only Coach Richard, but Coach Tony as well. Got him in the quiet markets. And fantastic trader, really, really good look at the market. Turns out that we actually trade a very similar strategy using the orb. Okay. So that was excellent to get a rundown from Coach Tony. He had a few words about your economic outlook, Coach Tiger. He absolutely loves it when you say the 30,000 foot outlook, because we were talking about obviously the news, as you said before. He goes, does Coach Tiger do that 30,000 foot view outlook? And I was like, indeed he does. Indeed he does with me. So we were loving that, thinking about the news coming up later in the week. So let's get on to my charts now. So I do things a little bit differently in terms of scalping. You're going to see me possibly do stuff that the other two coaches have said, hey, don't do. But the strategy works, even though last Monday that storm did take me out. If you guys were around, you'll see me popping in and then popping out as the internet deemed it to be happened. I got
it. Happens. It's happened to all of us.
Yes, I would randomly appear like a ghost, freeze on the screen, and then it was just Coach Tiger essentially taking it for 3 hours while I appeared and disappeared over the course of 3 hours. Apologies about that, Tiger. You did a fantastic job last Monday, mate. I would have struggled very, very hard if it was just me and my my companion teacher kept on disappearing. But as I said, happens sometimes.
Gift of gab, Richard calls it.
You've definitely got it. You've definitely got it. Cool. All right, let's get into it then. If you have seen Coach Tony previously, I know this is Forex and his futures. Maybe you've seen him, maybe you haven't. He will have gone over the orb. So opening range, and this one's with breakouts and targets. Now, he does it slightly different to me in the fact that he looks at the first 15 minutes, whereas I look at the first half an hour to build my range. Why do I do it as 30 minutes? Why do some people do 15 minutes? Why would some people do 20? It's all about back testing and the markets that you're using. Usually people ask me that question in the chat. Well, why do you do this, but someone else does this? If you've got back testing and you've got data to prove it, that it works, you can really select any amount of time frame for that opening range. But me here today, that's what I have. The back testing has said over the course of the years that I've done this, hey, Alex, the first half an hour, build that into your range, and then let's go off from there. So if we go back over to here and we have a look at it, opening range, this in here, for those of you who've seen it before, is my opening range, right? Just this in here. We'll get into the red line in a second. So we've got your lowest part and your highest part, and then it just extends out over the course of the trading session. From here, I have my VWAP, right? This is just a session VWAP starting at the beginning of London. That's what we've got running through this period here. Now, I'll just go into the last one that we're going to be using. So this is, well, we've obviously got the anchored VWAP as well, auto highs and lows. So that's kind of the Bollinger Bands that I've been alluding to previously, these solid lines. And I'll zoom in for us here just to make sure that we're 100%, and I'll get this up. Yep, it's these lines here. So occasionally they're going to be solid. Occasionally they're not going to be solid. When they are not solid lines, they have been broken, meaning that we're exceeding where we think our highs and lows are going to be. Now, unlike a Bollinger Band, that doesn't necessarily mean that we are going to then look for it to come back into a range. In fact, we are going to be looking to break out and continue, much like what Euro USD is doing at this current point in time. But if you guys have watched me previously, there are a few things that I look out for when I am hopping in. Number one, not to be within the range at all. That's the opening range. As long as we stay in there, maybe we're building liquidity, maybe we're just building orders in some way, shape, or form. I don't want to be in there. That's not where I'm going to get the big moves from. Maybe I'm going to dip in here, grab some liquidity, grab some orders, whatever it might be, and then the actual move is made once we break out. Hence why, if we go up here again, opening range with breakouts. So I'm looking for the breakout, not just to break out of the opening range. That is one thing that we can do. But like if you've watched with Coach Tony, and he does it slightly differently with different indicators, although he does use the VWAP as well, you do need some confluences. I'm not just here looking at, oh, it's broken through a range. I'm ready to hop in, guys. Let's go for it. No, we need some confluences. We need to be able to say, okay, it's breaking through. Am I 100% sure that it's going to do that? So in order to do this, what I like for it to do is break out initially. Now we have that initial breakout here. That's just telling me or giving me a signal that, hey, we're probably going to be going to the upside. Now, once it does this and it initially breaks out, I do want this retest. So not just the breakout to wherever it is. It can go high, it can go low, as long as it breaks out in a convincing manner. What does that mean? 2, 3 candlesticks in the same direction, as long as they're not really small ones, guys. Let's not look at something in this area like this and say, oh, that's a breakout. Let's be real. Let's be honest about this. We want some bigger candlesticks. We want some bullishness. We want some bearishness. We want to be able to look at an impulsive move and go, yep, that broke out. Now, once it does, we want the retest into this area. Preferably, or I should say it's not preferably, the rule is that we go and we hit this VWAP again. Whether it is the session VWAP or the daily one, you can see that this blue line actually starts from over here when the Asia open. So I can use either of these two here. Last but not least, I want it to break out. And not only just break out, what we were saying, we want to see this bullishness. We want the markets to convince us. I want it to break through this solid line. I want the solid line to disappear. I want it to say, oh, I cannot contain you. You are uncontainable, market. I don't know where you're going to go. Let's break through these highs. So realistically, we get a small one here. It does break out, it does retest, and then it does break out again. However, what I didn't like about this, and this is the difference, this is what I was talking about previously, I want this move to be like touching a hot stove. You touch it, you go, whoa, that's too hot, and the market shoots off. I'm not here to retest the line and hang out for 1, 2, 3, 4, 5, 6, 7, 8, 9. I'm not here on a 1-minute chart to hang around for 10, 15 minutes. I want it to react. I want the market to tell me, hey, there's an order here, or hey, we're respecting this level, and shoot off in the opposite direction. If you were here last Monday, the one trade that I did take was a winner. It hit down here, shot up, and we were done with that trade in the space of 2-3 minutes because it just came down, hit our area, and took off. Now, that did not happen here. It's unfortunate considering how we are looking for buys and Euro USD has decided to skyrocket in a bullish direction. I would have absolutely loved that, but hey, it's not part of the strategy. And as Coach Tiger said this morning on a trade that he missed, I'm not chasing trades. I'm not here to chase them. I'm not here to bend the rules of my strategy and say, oh, well, this is a retest, or it's hung around here only for 11 minutes. That's okay. No, we want our reaction. We want it to come down here. We want it to take off. We want the blue line to disappear. And unfortunately, not only is Euro USD giving us this story of being so close yet so far, we've also got gold, funnily enough, doing the exact same thing at multiple points. We almost immediately break out of this range, retest on the daily VWAP, but we haven't retested in the range. So we've only got a few of the points that we need. And of course, from there, it does take off and shoot up a little bit further. And even here again, when we do finally come into this area, we decide that we don't want to retest both the London and the Asian, so the daily VWAP. We just want to miss it entirely, say, no, thank you, and now start to plow up, much like Euro USD, into the stratosphere. So it does seem to be what's happening today is, as again, so close yet so far. And last but not least, as we go on to here, the real problem child, as it's already been alluded to, although we went on it last week, so that's saying something. Oil, which I will not be trading this session at all, even if it comes and makes a fantastic signal. At some point, you've got to look at the markets, especially a scalping one, and say, hey, it's ranging. If I'm looking for a market to convince me that there's quite a lot of liquidity, that the market is going to move, that the market's going to take off in a certain direction, this is probably just about as bad as it can get for my strategy. You want to be hopping in here and maybe there'll be 4, 5, 6 setups. Luckily, it's all in the range. But if you can imagine it's somewhere up here and it's doing the exact same thing just out of the range, how many possible entries have you got in this period of time? Maybe one here and one here and one here. We would have just had loser after loser after loser after loser. That is what we have at this current point in time. So when it does range with this strategy, should you ever look to use it? Should you ever want to follow along with some of my trades, which I usually do get into, but obviously with the markets being as they are before the news, they are starting to consolidate and chill out. I would be saying stay away from these ranges as a whole. And that's really kind of it for me. Again, with the scalping, I'm not so much looking at the sentiment of the market or structures or patterns as a whole. I'm kind of sitting here and waiting with my trigger finger, kind of like Coach Tiger when he was trading on the weekend with Bitcoin. I'm just ready to hop into a trade, sit there and go, okay, what is my strategy going to tell me? Because with scalping, particularly for me and how it is, discretion can be an enemy. Not always for scalping, but if you're trying to take the time to look at the markets and draw everything out and sit there and go, okay, I'm waiting for everything to set up and do X, Y, and Z, the move can go. As we said from last Monday, we were in a trade and it was finished within the space of 3-4 minutes. It was done. The trade was over. Nice. You know, if I had sit there and taken my time, would I have been able to hop into that? Not necessarily. So I just have my rules, my entry rules and my exit rules that I just follow. And I watch it and follow it along. And if 1, 2, 3, and 4 happen, you pull the trigger as fast as you can. I mean, for example, and if you guys were to follow along again, I've got on my opposite screen over here, if you ever see me looking, I actually am I am looking at the charts, I promise you, not something else. Got my other monitor set up. I've got GUI trade set up. I've got GUI trade set up. It's ready to go. So when I hop in, bam, I'm ready. I've got my risk already set up. I know what my lot size is essentially going to be, or a rough idea, before I even hop into my trade, because I know that for this, timing is the key, and you really need to go for it. Now, if you are a beginner, I'd probably say don't. Don't start here. Watch, learn, backtest, go into replay mode, take some trades on some sort of demo account and get a feel for how quick this market can really move, and how if you chase trades or you do a lot of I guess, psychological beginner moves, you can really get eaten up very, very, very quickly in the market. Sometimes a lot faster, but not necessarily always, than your day trading or swing trading, because we'll get into a lot of trades. But yeah, that's my analysis for right now. I wish I could give you guys a bit more. Usually I've already hopped into one or two trades already, but okay, go for it. Hit me up.
Maria's got some questions as well. Alex, from my side, target objectives. Do you use like fixed stop losses, take profits?
Yes.
Ratios?
Yes. So
maybe walk us through an example as if,
Okay, cool. Let's do this one because it would have been one that we could have hopped into. So it's not fixed as such, but again, we do have a rule. And luckily with this indicator here, again, if we go over it, opening range with breakouts and targets. The targets are built in, which just makes this an absolute dream to backtest, guys. It's an absolute dream to backtest because the targets are here. In fact, you can see them. These little thin green lines here, and there'll be one higher up. If we go down, they might not have been printed because we're not down here. Oh, here they are. You've got your red lines, which were underneath this range that we built last time on a Friday, right? We've got the red lines instead because the market's underneath them. Now, if I were to hop in, let's say it did retest here and it broke above on this candlestick, we are always going to be hopping into the market and putting it under the last low. So I would be chucking it here. That's where we'll always put it. We will find the last low. We will put it underneath. It doesn't matter if it's more of a minor low or a major low. Of course, that is within reason. I'm not looking at something like this and saying that one single down candlestick or bearish candlestick, I should say, is a low. We're not looking at that. We are actually confirming that, hey, we've got some bearish movement, especially if you chuck on an EMA. They'll help you out quite a lot to find your lows if you are trying to do that. Chuck it down here, and we'll always go for the second target line. So in this case, here's our first one. That's our first target line because we don't have anything in this area. This is our range. That's the first one. And we always go for the second one. Now, in this case, it is going to be a little bit of a bigger one. Again, I think I said this last Monday as well. A 1 to 2 for me is huge. This usually does not happen, and nearly a 1 to 3 is absolutely crazy. Now, I have a higher win rate around the 80% mark. I'm usually going for something around 0.8, 0.7, 0.9, maybe a 1 to 1 for the majority of the time. So this is on the bigger side. Please note, if you do follow along with me, these are your hen's teeth trades. These do not happen often. We will be hopping into quite a few trades. Again, 80% win rate roughly. But that is how I would have set up this trade in the moment should we have hopped into it. Does that make sense?
Yeah, absolutely.
Yep.
So you rely obviously, or backtesting wise, that you've got to going for the target objective is because you've got a very high success rate reaching it, right? So 80% upwards, that's massive. Yeah. So you can afford to, a lot of people will say always need to, aim for a higher reward than a risk. But when it comes to scalping, that's not necessarily the truth, right?
Absolutely. Right. Absolutely. Especially if you're going in for a lot of trades as well. You really don't want, it's a lot harder to go for the 1 to 2s and 1 to 3s, especially because how fast the market can move up and down. The pullbacks on a 1 hour, they don't look like anything. Yet on the with such a small stop loss like this, like 3.7 pips, we only need this candlestick to turn around and we're gone. Like we're out of the market. See you later. Right. So we really are looking for these smaller moves, and that's why you'll have a much smaller R to R. The only reason I have a high win rate is because I'm usually going for something like this. If I were to try and go for 1 to 3s, for example, or even what this trade is here, no way would I have an 80%, maybe even 40, less than that, So it does mix it up quite a bit.
That's very cool. Do you ever, like, let's say price gets in like a pip or two from your target, would you go to break even, mess around with your stop loss trail or anything like that?
Great question. So when it gets to a 1-to-1, I'm putting it to break even. So as soon as it would have hit this area here, I'm in break even. That's it. Another reason why it's quite high. I'm not counting break even trades. Now, of course, I'm not actually going to put it realistically at break even. I am going to chuck it a little bit higher just to cover those brokerage fees. Guys, you do need to factor them in when you're hopping into trades. Otherwise, a break even trade is not break even. You are losing money. So I am going to chuck it up. Yeah, exactly. I'm going to chuck it up a little bit higher.
Yeah, always
as soon as it goes my one.
Plus a pip or so. Yeah.
Yeah.
Oh,
exactly.
Make it pay you a cup of coffee at least, right?
Yes.
That brings us to our next question, which was from Maria. Hi, Coach Alex. This is the strategy I use. I'm so happy to meet you.
Oh, awesome.
She uses the 5 minutes on the 15-minute orb. And can you please go over your indicators you have on your chart and the reason you use them? You might have done it already. I'm a little bit late in reading that comment, but please go ahead.
Cool. Absolutely. I think I've briefly gone over them. But this one's just a Lux Algo one. Now, these guys are pretty good. I think in the space, at least where I am, in the scalping world, they're quite well known. And they do promote some really good indicators. This one obviously is completely free. I'm not paying anything for it, and nor would I. I'd make my own rather than pay for an indicator, honestly. So it's just what we draw out normally. So again, if I were to take this off and I was just to, I'll delete it for now. I can always put it back on. If I were to hide it, this is all that it makes. This is literally all that it makes. It just brings out the range for me and then draws these lines. Now, what you will find with these lines is that if I draw from here to here, for example, that's about 7 pips. If I draw from the range to the halfway point, you're going to find that it's roughly about 7 pips. So all these lines do, or what this indicator does, is draw the range out, and then it goes, okay, that's 50% of the range, that's 50% of the range, that's 50% of the range, and so on and so forth. So really dead simple. There's nothing crazy about that. This one, again, it's
stupid.
Yeah. This one's another. This one's another really easy one. It's just your anchored VWAP, auto high, auto low. It's the exact same stuff. Again, all it's doing is just putting a VWAP on the screen. If I go onto my settings here, you can just see that my time period is 30 minutes. I can change that to 1 minute. I can change it to whatever it wants. If I put it on the 1 minute, you can see it hasn't changed anything. And then I've just got my custom range. So this is starting from 5 to 5:30, blah, blah. And it's just putting on these lines through here. So you can see if I'm, auto VWAP, that's what we're going to have through here. It's just got these lines. So it's got your highs, it's got your lows. You can see they're just anchored to the screen. So they're just going to follow them around the entire time. That's essentially what we do. And sorry, I'll go into the settings here. It's just your high anchor and your low anchor. That's the only thing that I'm showing on here. Much like a Bollinger Band, it's just showing you the highs and the lows of the market. That's really how I explain it. If you know what a Bollinger Band is, you're going to know what that is. Everything else, I've just got switched off. Nothing really else matters. It's just for essentially these two. And it comes out with its own VWAP as well, which is this blue line here, which just trails for the entire day. So I always have a daily or a weekly one on because I know that this just continues on. And then quite simply put, I just get my own anchored VWAP. I find out where the market started here, or the session started. I click on it. And there you go. It's all really, really simple, all completely free. Takes you 2 seconds to put everything up on here. And then, you can just save it up here. It's called Dave after its creator.
First 30 minutes range of, was it the London session, Alex? Or
the London session, yeah. Yes, exactly right. So from from me here, if I zoom in, starts here at 1700, so 5 p.m. for me, and then it goes all the way and it breaks at 1730, so 5:30. And now we've got that opening range over the first 30 minutes. Again, some people like to use 15 minutes. That's what Coach Tony does. Now, of course, he's in futures and he does the NASDAQ and the ES, so a little bit different here. But for your Forex pairs and the commodities that I use, yeah, it's really easy. And then you can just apply it to the exact same markets and there you go. Everything is just working how it should be. So, yeah, that's the strategy as a whole.
Nice. Awesome.
Yeah, that's really cool to break it up
Another
into
question,
the increments.
Alex.
Okay,
So you don't trade the breakout. You wait for that pullback, right? And let's say
Absolutely.
you look at 3 or 4 different markets. Do you walk away after you've hit your first take, profit, or would you keep on trading? How many trades would you take? If you lost, let's say 2 in a row, would you take another one? How do you deal with that? That's quite often a question we get from a lot of our viewers.
Yes, so I'm a trial by fire kind of guy in terms of this. Some guys, it works really well. They, take 2 losses and you go, hey, I'll walk away. I'll go, markets just absolutely ruined me today. If you need to do it, when I backtest, and I'm very much a data man. When I backtest it for a certain period of time. So I backtest it for the entire London session. That's what it is. And that's how I got my win rate. That's how I got my risk to reward. That's how I got everything. So I have to sit through the entire session. I have to take everything. Because if I don't, I know I'm not going to be able to get my edge. Because it's based over that time. So even if I take 4 or 5 trades.
The backtesting results.
Yeah, exactly. It's always based off that. Because the data is the thing that solidifies me. Even when I do, and it has happened for everyone out there, you can have an 80% win rate and lose 5 in a row. It happens because the win rate's based over the course of a year. So you can have losing weeks, you can have a losing month, you have to stick to it. And that's what this strategy is. It's the ultimate stick to it.
That's the system.
Yeah, exactly right. If you've got that data behind you to say this is what happens year on year on year, you have to trust even in the midst of the worst week trading in life. You have to sit there and go, it will turn good. Obviously within reason. If you're doing 3 months and it's not working anymore, there's something wrong with the strategy. But
something's going
on. Yeah, sit there. And you take it. Whatever the market gives to you, you say, thank you very much. I'm going to keep on trading for the entire session.
Nice.
Yeah. And that's
what you're looking at. I mean, you at least got a high probability of that initial strong move in your favor. You know what I mean? So
exactly.
Yeah, that's
nice.
the beautiful. That's kind of the trade-off you get. I mean, again, it just kind of comes down to what's a person's risk tolerance. What's their time tolerance? So 80% win rate, that's awesome. Yeah, 1-to-1s. For me, going for my 3-to-1s especially on the higher time frames, not so much on the smaller time frames, I have about a 40% win rate. So there's going to be trade-offs, regardless the one you do. Obviously, I go for the bigger winners. He goes for the smaller winners, but he wins a lot more. So it's really cool to have all these different styles on here. And for everybody in the chat, you just take little bits and pieces of what everybody does, and it'll help you figure out your tolerance, your personal algorithm, so to speak. Right. So it would be a boring trading session if all three or 4 of us, did the same exact thing. So it is always really cool to see the different styles and the different terminology. That's part of the benefit of showcasing all the differences, just so we all have the same idea. It's just, how do we get there? So, if you've got the time and you've got the tolerance and the speed, Alex is an awesome approach, because I've even been playing around with the ORB, Alex, just because of you for this London session. So it's currently in my back testing arsenal. But
NASDAQ sometime, but normally around that time I want to be home already. especially going through
Yeah.
the morning session. Yeah.
But yeah, just to finish my thought on that, well, on the flip side, if you're somebody that has a normal, 8-hour job, that's where some of the higher time frames can benefit you. Like me, my favorite is still the 4-hour inside of a daily demand zone. That's still my favorite. And it's perfect for people with a regular job and you just want to set a limit order. Something you can check first thing in the morning before work, maybe at lunch, right? The benefits of a 4-hour time frame is you don't have to really look at it, but every 4 hours. So, before work, lunch, after work, that's a great time frame for you. But yeah, if you've got the time, I mean, it's like I said, I'm starting to test it out because especially with this London market, it's brand new to me, right? So I'm still kind of playing around with some of these time frames. But no, ever since that first day you were on with me, Alex, yeah, I've been kind of playing around with that, just trying to see how supply and demand fits in the context of the ORB. So it's been fun. It's been a lot of fun. Had a few winners on there, a couple losers. So it's, I think, okay results to start, but we'll only get better at it.
That's what we love. That's what we love right there.
Thanks for that, Alex. I just got word that we're going to be holding 1 hour futures challenge again this upcoming Friday, guys. This is where our futures traders during that session, lots of movement, volatility, take each other on for an hour of friendly competition, guys. So please do tune in. That'll be on 19th of September, again, this Friday. And there'll be 4 coaches going head-to-head for a little friendly competition amongst each other. Trading the futures markets, right? I believe Daryl mostly trades the ES, Tony the NASDAQ, Sam ES, Paul trades live cattle as well, I believe, from time to time. Very, very interesting group of guys. They're really good traders.
Lean hogs.
It's just really cool to watch. So if you
he
guys
was
are
in lean
interested
hogs.
in watching professional traders take each other on in a friendly environment, then please join the stream on the 19th of September. And they start at, just always try to figure out the actual EST. That's 3:30 EST, right? When they kick off. That's when the New York session starts. Or was it 4:30?
I believe they start at.
You see, all of us guys are going like, which time is that?
Yeah, it's about 9:30 Eastern, I believe. Yeah, 9:30.
Yeah, what am I talking about? Yeah, 9:30 Eastern, correct. That's when the stock market opens, right? So lots of the volatility comes in there. And it's very interesting to watch. We've held this before. We're going to probably try to do this more often. So make sure that you go and check that out, support the coaches. And I do believe there's also some sort of, you can interact with them like you do with us, obviously, in the chat.
Yeah.
But there's additional features that's really cool. So do go and participate, again, this Friday, the 19th of September.
I believe Coach Daryl won, I think, the first one they did. So, Tony, Paul, and Sam are going to be looking to avenge their loss, right? So they'll be attacking him. But they're also going to do something pretty cool, and I believe they're going to be taking people from the chat to pair up with a coach. So I don't know all the details on that, but I do know that that's something else that they've got in the works, where they'll be pairing up with a coach. So, I believe. Well, they'll go over it, but I just thought that was kind of cool too to have the chat involved as well. Pair up with a coach of their choosing for their competition. So,
absolutely.
Cool stuff.
By the way, guys, that's why we do all this, right? For all our viewers, hope you can learn something. We've got so many different coaches here. They all trade differently, most of them, right? So here you got Alex, the scalper, myself, using completely different analysis technique. Tiger's, supply, demand, higher time frames. It's really dependent on what suits you personally as a trader. Time constraints, all that sort of stuff. So, again, if you've got any questions during these sessions, please keep on asking, guys. If you've got any markets you want us to have a look at, we'll be more than happy to do that as well. And then it's also flag wave time, guys. Please drop your flag in the chat so that we can see which country you are from. and who's representing the strongest country today. That'll be interesting to know. Again, we also want to be giving away that 5K challenge account during the session, if we can find someone. So please make sure that if you want to win that account, that you do subscribe to both Hola Prime TV and Global accounts, as well on the Instagram handle. And keep commenting, guys. That's obviously how we know who's in the chat, and we can, go and select a name. Check if you won before, because if you won before, you won't win again. But if you haven't won before, then step number 3 is very important. Make sure that you go link your email to a YouTube bio, so that we can actually reach out to you with the account details to get you all sorted and set up. All right. So again, we'll be selecting a winner very, very soon. Yeah, we're also in the background busy with the process of selecting someone. So we'll let you know again live who that winner is. I'll announce it a little bit later. So keep chatting, guys, and please go and follow those steps. Maybe you'll be today's lucky winner. We've been giving away these challenges on a daily basis for quite some time now, so we don't know how long it's going to continue for. So make sure that you follow those steps. It could stop at any given time, and then otherwise you'll have to go and pay for one, right? I think most people in here in the chat already won a challenge before, so it's as easy as that, right? Just follow the steps, and there you go. Also, like and subscribe, share, this channel to everyone like-minded traders. We're trying to grow this channel as much as possible. So just go share it, friends, family, whoever the case might be. So Nigel is from South Africa. What's up, Nigel? And also like and subscribe, guys. I do believe, and they said earlier on there, that there's a free challenge account to be given away if you like and subscribe. So I'm not sure if that's the one we're talking about today, but please do that. Please do that. All right.
Cool. Well, I've got a question for you guys then, being different traders, and I think this is it's something that everyone I'd love your takes on, and it's we were talking earlier in the day about it, Coach Tony and I, and we got the chat involved, and it was about indicators that are based on, I guess, a market sentiment. And what I mean by market sentiment is what other people are thinking, like psychological levels, for example. Because we were talking about the Fibonacci retracement tool specifically. I'd love to get your guys' knowledge on that and what you think about it. Because I know it's probably one of the more popular indicators. Everyone knows better, everyone uses it. But Coach Tony brought up the really good point that, just like Bitcoins or altcoins, for example, it's really great that, an amazing person can create this and everyone goes, oh, wow, this XYZ person created it. But unless other people believe in it and they believe in its ability to do something, it doesn't go anywhere. And I think that's what we were kind of talking about with fib retracement. Is you can have all these levels and you can think, oh, this is absolutely amazing. I've got all these, this level here, 0.5. It's a massive level, et cetera, I'm going to hop into it. But the reality, and this is, I guess, my opinion, what I wanted to know from you guys or how you see it, I think these levels can be quite fallible. Like I think they do work, and just like Coach Tony was saying, he's got 3 levels. He only uses 3. He uses these 3, and he says everything else I wouldn't touch. I wouldn't go near it, because like a bell curve, the further out from there you go, the less and less and less people use it, and therefore its validity decreases in the market. So just wanted to get your guys' opinion on that as different
Alex,
traders to me.
For me, it's a fantastic question. We get it so many times from viewers, but perhaps beginner viewers. It's like, what about the fib retracement? And we don't really use that often, fib retracements. I would more use fib extensions, for example. But let's say we're dealing with a market that's flying into the sky, like your Nasdaq's, gold at some stage. There's no structure to the left. So, how high can it go? The question is, or how low can it drop? You want to, I like to use that for my measured moves. You quite often know that if you, let's say, at first phase higher and we have a breakout of that first high after a small correction, that price will typically move towards at least 100% again of that move. So like a measured move or maybe an extension of that. But to be using it on its own, I think it's definitely not much use for it, right? If I were to use it, it's just an extra confluence point with, let's say, an indicator, or let's say it falls within a fair value gap on a higher time frame, stuff like that. So to be solely used on its own, I don't find much use for it, to be honest.
Makes sense.
Yeah.
Well, you can sorry, putting it that way, when you first start trading, what's one of the first things you learn about? It's like fib retracements or Fibonacci levels, right? So it's also cool to know where all the other traders are looking at. Are we going to have manipulation at that area? Can you spot it as a trader that's been around the block a few times? Where everyone else gets shaked out, because it's never going to go to exactly 0.618. It might go 0.618 to 0.786, and then pull all the way back and close underneath 0.618. And then, all the other guys that had their stop losses in between, they already got flushed out, you know what I mean? So, and then they go ahead and say, like, yeah, but 0.618 definitely worked out. It's like, no, bro. They know what the retail traders are looking at. And they will, and I think a lot of times these things that you learn online, or at least a lot of the free stuff, I mean, there is some good resources, but when it comes to basic technical analysis like Fibonacci extensions, retracements, there's some value to it, but I also think it gets taught so that all the retail traders type of, sort of like herd towards doing exactly the same thing, entering at those levels, placing stop losses above or below those levels, whatever, and then the actual market makers manipulate the hell out of them, knowing exactly what they're doing, so they can follow their orders and do exactly the opposite.
No.
That's just my take on it.
Yep. Absolutely.
Yeah, and I've got a very similar take. I mean, I don't use it to place any buying or selling decisions, but I do use it kind of as a filter. Because again, just like Richard said, I look at it in the perspective of a bank. Where are they looking for liquidity to fuel their orders? Well, they know that there's going to be a lot of people at the 50 and the 61.8 level buying or selling. So, if I have a zone just beyond that, then that's some of my favorite setups. Just knowing that, those people that bought in the 50 or 61, they're dropping their stop losses below. So if I get it down in the kill zone, a demand zone, right? The kill zone for me is the 78% to 88%, right? Then that's a trading strategy all on its own, but in combination with unfilled orders and liquidity, pretty powerful. So I just use it as nothing more than a filter. But never a buying or selling decision. If I had to strip away everything except for one item, it would just be the supply and demand zones themselves. But I do like to see at times, if I just need one more bit of confidence in this or that zone, hey, where's the fibs? What's the fibs looking like on this zone? Yeah. Just again as a filter, but never as a buying or selling decision on its own. Because that's where all the retail traders are doing it, and they're the ones getting wiped out. We say it all the time. It's an ugly stat, but 90% of traders lose 90% of their account, typically within the first 90 days, right? It's an ugly stat, and that's why, because most of them are reading the traditional technical analysis books that are written. I feel like they do that on purpose, some of these people, right? Like you said, to get the herd mentality. Right.
Yeah. Absolutely.
But the reality is, the markets don't. They just don't really work that way. Yeah, you can get it to work a time or two, and that's usually the time or two where somebody will screenshot their winning trade, right? But they won't. They don't share the 3 or 4 or 5 or 10 times they lost, right? So it's just not a strategy on its own. Yeah, used in confluence with other items.
That person that goes to the casino, you only hear about when they win, right?
Yes. Yeah. Absolutely.
Yeah. Look at my $1,000 jackpot. let's ignore the $20,000 I blew over the course of the previous year. But we're going to show you this one $1,000 winner. I got friends like that. I got one friend in particular, is one of my bowling teammates, and yeah, he's always at the casinos here in Kansas, and he'll never talk about his losses, but that time he wins a big jackpot that's going on his Facebook, picture of it. And then under his breath, he's like, "Oh, I can't even tell you how much I've really lost, though." Like, yeah, I know. It's cool to brag about something when it works one time.
If I feature my charts back in, then I'll give an example of what I like to do with fib extensions, for example.
Amazing.
I mean, I just got the Australian dollar Swiss franc chart open here, still waiting for hopefully a bit of a deeper decline here. And, I was talking about like a zigzag pattern. And generally, the underlying symmetry of a zigzag, let's say, of an upward sloping market, price moves lower, and it gives a zigzag lower, right? Before continuation back upwards. Now, while that, I want to go and measure, let's say, with a fib extension, that first range, extend it lower, because I know that zigzags would typically extend towards a 100%. So a measured move of that first decline, or in some cases a little bit more, like a 1382, right? So I'm not using this as a target. I want to see extra confluence at that area, right? The other thing, for example, that I like to use, let's say with zigzags, let's say price starts busting through those levels, then the zigzag formation idea is out of the window for me, because then this is getting too overextended. Something else is going on. Maybe a deeper retracement's underway that just started, whatever the case might be. I don't know where there's a good example. Like, here you could see there was a zigzag, right? First thing I'll do is rip out the pitchfork, because I know zigzags like to terminate at one of these pitchfork areas, right? Or in this case, a low red warning line. It hit it twice and it found support. So I'm not going to just go ahead and trade this, for example, place an order there. It's just, it gives me an idea prior to price reaching that area where I might be interested in taking a trade. I didn't trade this, so I'm just showing this as an example, right? So quite often let me, see me draw like an area there. And it's not just a level, it's an area that I'm interested in for price to hit. Now here you could, for example, go ahead and let's see what a fib extension would do. Go from that high to this low to that high. And you can see that if price took a little bit longer and not slice through that lower area, then that would have been an area of interest, because the first drop lower, that range projected from this lower high, that will be an area of interest. But what happened here is price just sliced through it. But here we have a 1382. Now I don't really want price to go much lower than that area there, because otherwise something else is going on, in my opinion. And there we have a little bit of confluence between the 0.382. We have the low red warning line. Slowly start building the case as to where price might find support. Do we have maybe a fair value gap there? Maybe we have a demand zone over there on a smaller time frame. Rather than just like I'm getting long at 1382. I've already used two different tools here, or at least one. The pitchfork. And I'll quite often look on a different time frame if I've got a fair value gap there or supply and demand zone. And, don't just use the tool on its own, but use it as, an expectation of where price might head towards, especially with the extensions. The retracements, I don't really find useful, to be honest. So I'm more into the extensions. But, again, just a projected area where price might move towards. But it has to overlap with other analysis techniques as well.
No.
All right. Sorry, I'm just catching up on the chat here. Mike,
I was trying to get into it. Trying to get into a trade,
All right.
gents, but I messed it up. So I got to
South
fix
Africa
it.
sympathy, South Africa, Maria from the UK. Mike, where's that flag from on Mike on YouTube?
Czech Republic, maybe? No, I can't remember.
I think it
Or
is Czech
Czechia?
Republic, yes.
Is that right?
Czechoslovakia.
It's Czechia now, right? I believe
Doesn't
Czechia.
like-
Yeah.
doesn't-
I still call it. Yeah. I went to school.
Over an hour left here. So, sorry, you go ahead, Tiger.
Yeah, I was just going to say, I went to school with a gal that was a foreign exchange student from Czech Republic. Katarina was her name. Really cool person.
You had some eyes on
From
her,
Czech.
right? That's why you remember this.
I
What's
think it's
that?
actually Manila.
Oh.
With a little sun in it.
Oh,
Tiger only remembers this because he got some eyes on her. He had some eyes on her.
yeah. Yeah. I guess we're going to have to brush up on the rest of our flags, Richard.
Looks of it.
Yeah, so I got into a pound Aussie short, but I messed up my stop loss, so I had to close it out. And I'm in the process of getting back into it. I typed in the wrong digits, so my stop loss was a mile high. I was wondering why it was such a small reward on my take profit. So, yeah, I'm just trying to get this set up. Sure, that's fine. Yeah, that's fine. Back in. Go ahead and move it on Nova. I got a pending order set on Bitcoin as well, just for a small little setup. So I'll go over that again, or over that as well.
Okay.
But yeah, just looking at the top here, pound Aussie is giving me a bearish -5 score. So kind of looks overall 1 hour zone. Now, the one thing I will say I dislike about the zone is there's a lot of candles to the left when you're looking at it on an hourly basis. Picture looks a little bit better when you go down to some of these smaller time frames, but not a whole lot better, but I thought it looked good. So I'm going to probably, let me just look at this again. Okay, 5 minutes. So there's a little 5 minute zone there. This was a 30-minute zone. So there's a little bit of confluence. I just wish there wasn't so many candles. So that's the one thing that's kind of going against it, but just stepping back out, it's obviously in a downtrend ever since August 25th, which of course was a couple days before my birthday. So it's just been trending downward ever since, even on a 4 hour. So 1, 2, 3, 4, 5. Yeah, that's on the edge. If I'm looking at this thing on a 4 hour time frame, it's on the edge of, where I just don't really like to see so many candles. Obviously, on a 1 hour, it looks okay. If you're just looking at the wick itself. So anyway, just going back down to the current time here. Yeah, like I say, it really kind of started with the 1 hour because we did have a nice high volume drop with the leg out candles, and then it just kept going. So we're getting Coach Michael's W here. There's this little W shape. Bam, 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 bam. So that's one thing. That's one other item I'm looking at, but yeah, we're gonna probably just take a small poke at this thing. Yeah, like I said, I messed up my risk reward a minute ago. So at this point, since I got out of the trade, I'm probably just gonna keep an eye on this, see if I can get some type of a big wick, get some volume spike, and then just sell it to the downside. So 2.0475. Oh, that's what I did. I missed a digit. 2.04475 is what I was trying for. That's what I messed up. Good job, Tiger. And then, I'm going to set the initial take profit down here to this low. So we'll just go 2.03526. Yeah, something small on this one. We'll do a 50 spot. What else was I looking at here? Not really getting a whole lot of help on the RSI just yet. As far as a divergence, a little bit overbought on the RSI. I do like that in the context of obviously the higher time frame downtrend. Huh? Pitchfork?
Pitchfork and upward.
Let's see what our trend line does here. Voice is a little scratchy all of a sudden. Okay.
Ooh, nice.
All right. So we're pretty close to that little trend line. Almost there. Yeah, I think I'm just going to wait for this thing to come in a little deeper now that I look at it from a little bit higher time frame. I'd like to see a little bit more confluence, to be honest with you. What's my VWAP? Where's my VWAP at? Anchored VWAP. That's not really helping me. Not really helping me, I don't think. Yeah, probably not getting a whole lot of help from the VWAP. But yeah, I think at this point, I think I'm just going to wait. I think I'm going to wait till it comes up a little deeper, catch a few more unfilled orders. Because looking at this thing on a 5-minute, yeah, I mean, I quite like that zone a little better, to be honest. That would make for a much quicker trade to improve the R&R a little bit. We got a fairly efficient market in this area. We don't really have any fair value gaps until obviously we get up to here. Yeah, so that's, yeah, the more I look at that, the more I think I'm going to wait on this for a minute. But just looking at, so I'm going to keep an eye on that. But in the meantime, yeah, Bitcoin, I did set a limit order on this demand here. So I got a 1-hour demand inside of a 4-hour demand if I go up to my 4-hour. So on this one, yeah, I got a limit order set just ahead of my 1-hour. So that's what I'm looking at there. It came down. It looks like it's trying to turn around and run off and leave me. But we'll see. So that's the immediate 2 items I'm looking at. Like I said, on some of these couple smaller time frames, 15 minutes. I think I even saw. Yeah. So 15 minutes, I'm getting the same gap. Got another little gap inside of that 1-hour gap. So that's yeah, so that's what I like to see. 15-minute demand, gap, another 15-minute demand, another gap. So that's all within the 1 hour, which is also within the 4 hours. So pretty good confluence. I like that for just a short-term day trade. Okay. We're getting liquidity under here. This candle here swept this liquidity. So people that are buying in this immediate area, they're putting their stop losses down here right in the demand zone. So just get another little liquidity sweep, collect unfilled orders in the zone, and would definitely like to take this sucker long. So just like that. What the heck? I got some type of bug flying around me. I don't know what it is.
Yes, same.
That was weird.
I might share my screen because I'm about to hop into a trade, actually.
Oh, yeah.
So,
yeah, absolutely.
Back end, I think.
Absolutely.
I think I've just shared it. I'll just make sure with the back end that I have got it up. If we could share my charts, I think it is there. Cool, we can see it. Okay, yes, we are on. So entry is literally right here. So what we talked about previously.
Looking at again, as well, Alex.
Oh, really? There you go. We've got if you wanted to be a little bit conservative, and you probably should be, you'd put your stop loss here, right? Rather than put it right underneath here. I believe that's the better move, right? Again, I wouldn't really be calling this a low just here. Realistically too, because this is just a doji candlestick. It's a nothing. It hasn't gone anywhere. It hasn't done anything. So I'd be looking at this being our low here, right? And what we do is not only do we beautifully retest the VWAP for the London session, we've also got the VWAP for the daily session as well that started in Asia right here, this blue line. And we'll retest it both. And from there, this is what I like to see. This is the putting your hand on the hot plate and going, ooh, that's way too hot. We hit it. We maybe mess around for a minute, and then we break above. Now, I didn't hop in there. Why didn't I hop in there? Because the top of what we were talking about before, the auto highs and lows, had not been broken. And you can see that afterwards, the market's kind of figuring out, where do I want to go? What am I doing through here? Where do I want to be? And then afterwards, when we get that second push here, the one that we've actually hopped into, we finally break above it. So here, and you can see that after this candlestick, we now have that thin white line. It's disappeared. It's no longer a solid. We're in. We've got our stop loss here. Nice. Now, take profits. I don't particularly like it, but we're doing it because that's what the data says. We've hit here and we've made double, nearly triple tops on this level. And we've just put out a doji, which is not what we want to see. But we're not going for this line here. We're going for this line here because we hopped in above our first target. So I'm not looking at what's behind me and then going, here's my target. Not going to do it. I am looking for, here's your first line. There's your second line up here. And that's exactly where we're going for. And you can see here, this is more like what we're looking at. Yes, it is a big stop. Yes, we've got not a negative R2R, but essentially it's below a 1-to-1. So I call it that, a 0.56. That's what we're hopping into. Now, should we hop into roughly around this area here, we will be going to break even anyway, because that's half of what we've got here. That's essentially our 1-to-1. That's 309 pips, for example. We've got like 157. So that's roughly, and I will call that out when it happens, but it'd essentially be right here. If it did actually move up to this level, we'd be then moving at a break even. Hopefully it shoots up and it goes. But this is the position that we are in right now. Essentially, I just risk 1% of my account. So that's how I would be hopping in. There's a really good lot size calculator for those of you that ever need it. It's this one. You can always set it up super easy. And if I've got it in the wrong position, of course I have. Very unprofessional of me. Let's do that again. Indicators. Click it. My entry, my stop loss, my take profit. And when I apply it, it would tell me in here. I just have to change the risk to 1% and make sure my account size is fine. But if I go into here, it then tells me what my lot size needs to be. So I would be hopping in or have hopped in for 0.018 lots. That is what I am in for this position here. I'm risking 1%, $100 here. If I make it, well, I'd make like $56. I'm risking more, obviously, through here. So that's why it's a negative R&R. There you go. That's it. We're in the trade.
Right on.
Cool. Yeah, I was looking at a very similar, area to get long. I actually wanted a little bit lower. And around 3642. A little fair value gap there. I'm just thinking we're getting some sort of maybe a ceiling triangle formation. But stop loss would be at the same area. If I could get a little pullback, then I'll join you. But
I'll join you.
Probably in it there, and it's just going to run away from me, and you're going to sit with the profits, which is good. Don't let it pull back.
We'll see.
Hey, gents, I'll be right back in 2 minutes.
Yeah, cool. It'd be just like the markets to turn around and say, hey, This is going to be one of that 20% where we're going to just walk all the way down. It only has to go this high up, and it'll walk all this way down. But we'll see. Maybe you'll get the pullback. Maybe you won't. Maybe you'll hit here, and we hit our 1-to-1, and I can put it basically at my break even, which again, guys, put it a pip or two above, put it somewhere around here, just to cover your brokerage fees, that sort of deal. Don't actually put it at break even. We don't want to be doing that, but yeah, put it here, put it in, and that's what we'll be looking at. So now it's just a waiting game. We'll have to wait and see. Is it going to be 5 minutes? Is it going to be 10? Usually it's no longer than 10 minutes, but we'll see, and we'll wait. But that's the trade.
Cool. Nice. Nice, Alex.
Well, hopefully we break out of whatever's going on here. Hopefully this is it, coming towards the end of London anyway. We've got like just under an hour left. Hopefully pushes that liquidity. We break out of this range. If not, we just need it to hit the top of the range, and then I can put it at break even. So we'll have to wait and see on that one there.
Cool. All right. To all our viewers, we're just waiting for Tiger to get back quickly. We just stepped out for a minute or so. I believe we have decided on a winner for today's 5K challenge account, which is really cool. We'll just quickly wait for him to get back. He'll be back in a few seconds. And then we'll announce that winner, guys. So don't go anywhere. Everyone in the chat there, we've got a winner for today. The first winner for today. Again, we're also going to be giving away the 25K challenge account later on. So you can still, stand a chance to win that maybe later on. Welcome back, Tiger. We might as well do it now, guys. Yeah, why not? Because we can. Right.
It's moving up.
All right. Tiger, we got a winner. We're going to announce.
Sweet.
And we'll jump into the charts right after that. So
awesome. Let's see who it is.
Roll, please, guys. Forex account goes to Michael Claes. Hopefully I pronounced that right. Michael Claes, here are today's 5K Forex Challenge account winner. Congratulations.
Congrats.
As easy as that, guys.
Amazing.
Just follow the steps I talked about earlier on, and you could also be in line for our next prize. So again, from our side, congrats, Michael. You are today's 5K Forex Challenge account winner.
Applause.
Hoopla.
Applause.
Applause.
Love that.
As easy as that, guys. As easy as that. Oh, I see Starboy's in the house as well. What's up, Starboy?
What's going on, Starboy?
Yeah.
What's going on? I'm just waiting around on this pound. Oh, there's my trigger. Come on. I'll make sure I did the trade right this time. Okay. Yeah, I messed it up twice, gents. But I think I finally got it in okay. I was adding a digit, and then I was not having enough digits on the first order. But I think I might have gotten a little bit better of a price. So we'll see if this works out. So let me put that back in the chat here. All right. Short GBP AUD for 0.21 lot. There we go, back in. I re-entered that order for you.
Nice.
Re-entered. We'll see if that works out. Again, that's a -5 bearish score, so gave it plenty of wiggle room too. So we should hopefully get some reaction off of that. I'll go over that here in a minute.
Yeah, congrats, Michael. Sympathy saying well done. Good stuff. And Tiger Short. Now I'm feeling really alone here. Maybe I'm getting
You're alone?
Back I wanted. Hopefully I'm not jinxing it, Alex.
Oh, and gold.
Yeah.
Where was my? Yeah, I mean, I have a gold alert at the 36, 33 level. That's pretty much what I'm interested in. Little 15-minute demand inside of a 1-hour demand. That's where I'm at. But hopefully we don't get our hit and Coach Alex gets his money and then price comes back and tags us in, Richard. How does that sound?
Yeah, let he go first.
Yeah.
Well, honestly, I would prefer price to go up higher towards his target because that would show the underlying zone a little more strength. Because I just wouldn't want to buy that demand unless it goes at least breaks those highs to the left. If it breaks those highs, then that would make me feel a little more comfortable about a bigger pullback to the demand zone I'm watching. So yeah, hopefully that triple top becomes a quadruple top for Alex, shows some strength for our alerts underneath, comes back, tags us in. Then we can all make money. We can all be fat and happy. All right?
Guys, I just quickly forgot to mention, Michael, again, congrats from our side. It's also important that you please sign up to our Discord channel if you haven't done so already. And within the channel, you need to go to the hashtag claim giveaway channel, which is a link you have to click on the left-hand side within Discord. And there will also be a step-by-step guide that you would need to follow to get you set up with that account, right, to claim your account. So very important that you also follow those steps. So again, to do that after the session, we still have, what's the time now anyway?
6:30.
Is my clock on my PC? 6:30. So we've got 45 minutes. So please do that after the session. It's important that you go and follow those steps to claim that account, and we'll help you get those sorted out. To anyone else in the chat there today, if you haven't joined our Discord channel yet, please do so. We've got a great online community there. All our coaches also post on there, whether it be tips or books that we like reading and all those sort of things, or just helping out our traders that's present inside. There's so many channels. It's really worth going checking out. A lot of resources and stuff too. So, and also a fantastic support staff, right? So we generally find if you got any questions, probably the easiest way to get support or help as soon as possible is by joining our Discord channel. What's up, James? Coach James in the house.
Coach James. Hola. Hola, hola, hola. Yeah, I was trying to find that spot. Giveaways, yeah. No, that's not it. Running offers, prime content. Looking at all my...
Yeah, hashtag claim giveaway channel.
Claim giveaway. It's, claim giveaway under Hola Prime TV. That's where it's at. Claim giveaway. Claim dash giveaway.
Coach James saying that he's watching the best trading show on the web right now. That's true. That's true. We are trying as hard as possible. So to all our viewers, hit that like and subscribe button. Share this channel far and wide with everyone you know. Anyone that's interested in trading that you know.
And the cats. And the dogs. And your pet horse.
Viewers in here that's been with us since we started Hola Prime TV, so it's also good to have long-term viewership retainment, which is also good to see.
Yep,
again, right. Guys, it's all done for our viewers, right? So keep watching, share it, like, subscribe, all those lovely stuff. And support our coaches during the afternoon. I always say afternoon sessions because I'm in South Africa, but the New York session. I'll also be doing the pre-market pulse with James today and tomorrow. That's when I join him. That's 15 minutes after we end the Forex Fire session.
putting in some overtime.
Ask questions. Overtime.
Yep.
Yeah.
Well, I'll definitely be watching, checking it out. I'll be interested to see what Coach
just popped up. Tiger, maybe read that for us while I try to retain my voice.
Yeah. When the dollar starts moving fast, traders usually do what? They chase it like Tiger chasing pips. They analyze like Richard writing notes. They wait for perfect setups like Alex, or they panic and eat snacks. So that's your 4 choices.
Oh, gosh.
It's a good one.
I do love to panic.
I mean, I like to eat snacks.
Oh, yeah.
I usually get my bag of animal crackers, my 1 pound, 2 pound bag of animal crackers, and just nibble on those. Just like
what an animal
just like the old days.
Animal crackers. They're not dog biscuits.
They're just little biscuits. Yeah, biscuits that you guys call them over there across the pond. Biscuits, crackers. They're not really cookies because it's just basically like a vanilla flavored, I don't know, wafer or crisp, or whatever you want to call it.
Biscuits.
They're not chips, but now they make them with chocolate in them. But yeah, just regular old boring animal crackers. Yep. That's my snack of choice. Come on, Pound Aussie, drop for me.
Nice.
Yeah, I'm trying to see what gold's doing. It's
Come
not
on,
making up its mind.
Yeah, it's debating.
Yeah,
It's like
just so close to the 1-to-1
here.
Alex, we like to throw the magnet tool up top to suck up price, so that sometimes can help. These psychological tricks. So, like, yeah, I'm.
Prayer hands.
The magnet, the really strong one.
Yeah.
The prayer will also work.
We resort to. Yeah, I got mine trying to suck down Pound Aussie.
That's it. You have to revert to it sometimes. You have to hope and a prayer just to see what's
Hope
going
and
on.
a prayer. See if the trading gods are listening.
Oh, yeah.
Yeah, that's basically what my Pound Aussie is doing. Just coincided
Let
with.
us know if you want us to look at any of the markets you like trading. If we haven't covered that before, even if we have, and you arrived a little bit.
Yeah,
late,
you can always go over it again.
We'll look at it again. No problem.
Absolutely. Well, I guess in the meantime, for those of you that are following this, I can quickly go over this one. So I think this is a perfect example. I think this doesn't just happen on 1 minute charts. It happens on 1 hour, 2 hour, 4 hour. About and I think Tiger showed it earlier. His perfect trade. Don't get swept up in all of this. I think with ranges, you can sit there and you can go, oh, there's so many opportunities, or it hasn't been happening, and you get that itchy trigger finger, like ready to just pull on a trade. This is exactly why I said I won't be trading this under any circumstances, because no doubt we've got some orders, or did have some orders that were sitting here, probably still do have some orders that are sitting in these areas, because the market's going back up into the range. So in order for it to break out underneath and then go back in, we've taken out some orders. We probably put some orders back in, but you just get faked out. You want to look for more confluences like what Tiger does in those kill zones, for example, because we could go out here. It's done everything that we wanted. It's retested. It's broken out. We broke through this area really, really quickly. Of course, we can't hop in whilst it's in the actual opening range. We can't do that. As soon as we come out, move sideways, go straight back up into that range. And I can remember first 2 years of trading when I was going through this sort of stuff. Ranges absolutely killed me. The fake outs, the false breakouts, This is where it's a retail trader's graveyard. You'd much rather, well, my advice to you is seek a better entry somewhere outside of these zones. Leave this area to the retail traders that want to just hop in because it's shiny and it's here, it's new and it's exciting, and leave it and watch what happens up here or below it in the areas where once that liquidity has been taken, and then you can see a move, because you can see it clear as day here. The intention was to never go down. That wasn't the intention, because now we're going straight back up with way more power than realistically we're going back down. It's here to trick you. That's what these areas are for. No matter if you're on the 1 hour or the 15 or the 1 minute, they all
sit in the just above or below it and just walk away or look at something else.
Yes.
You've got much better things to do than getting sucked into all of that mess, because psychologically, maybe you took a loss already, Mike. Alex, this probably happens a lot. So in the top there, you think it's going to break out. You get sucked into it, reverses against you, start revenge trading, and then things just start running sideways. Breaks out through the bottom. You could probably make that zone a little bit wider than the bottom there now, and put an alert above and below it, and walk away. You know?
Yep.
Yeah.
That
is a 1 minute time frame, by the way. So but look how long it's been in there, moving sideways.
Exactly.
That's a lot of time to be looking at the 1 minute time frame.
Oh, absolutely, absolutely. And it's the same when you're on a 1 hour, 2 hour. Like if you've been following a pair for quite some time, and it's been in there for days, a week, weeks, eventually your head is going to get sucked in. That little voice that's in there that's saying, you can take the trade, or this is the end. This is where it breaks out. No, this is where it breaks out. Now, no, it's taken both of them. It's going to break out up here, and that's going to be it. That voice will get you eventually, because we're human and we're going to make mistakes, and this is a highly stressful job. So you want to stay, as Coach Richard just said, you want to stay as far away from this area as possible. Set your alerts and say, see you later. I'm not going to look at you at all until that alert comes off, because I don't want to be seeing it. It's the same with this one, and why you saw me earlier on, and even though we're joking about it here, if I'm in a trade that I don't necessarily need to, now we get to move our stop losses. Okay, fantastic. So I'll be chucking it somewhere in there. There we go. We're okay. But I'll move this away and go, okay, see you later. I'm not going to look at this trade unless, of course, it's something that I need to watch. But now that I'll move that, this trade no longer concerns me. It's either going to come up here and hit this area and I can set an alert, or it's going to hit this area and I can watch it and make sure I'm out of the trade. But now I can just put that away and say, see you later, because it's the exact same thing with psychology. The longer that you're looking at a trade, or the more times you go back to look at it, the way more likely you are to mess something up. So that's my advice to you guys that are starting out. For sure.
Yep.
Sound advice.
Yep.
Yes, that's for sure.
So much pain in getting that advice.
Don't diddle in the middle.
Yeah. You got to pay the school fees to know what you're talking about first, right?
Yes, you absolutely do. The school fees they're tough, they're high. So, yep. But once you do it, you'll be right. So learn from your mistakes.
Mm-hmm. Oh yeah.
Cool.
Yeah.
Well, have to wait and see what's happening.
Half an hour. Yeah, half an hour until the end of this session. Sympathy, what you looking at, Nigel? Oh, Nigel, you're welcome.
Yeah, let's see what else y'all are looking at. Let's see.
Alex,
I don't really get into a lot of
higher.
Yep.
Yeah, it wants.
Tiger's got a magnet on his, I suppose.
Yep, got a magnet trying to suck price downward. Yep, on my pound Aussie.
Shut him. See if it works.
Sometimes it does.
A double prior and a magnet.
Yeah. Pulling out all
Two
the
magnets.
stops.
Yep. 3 magnets, multiple magnets, especially if it starts getting closer to the stop loss. You know, you got to put a stronger magnet on. Got to resize it, make it bigger.
Yeah. Well, it's just this is the point here. Like we're either going to do it, we're going to break through, or I mean, this is the same with anything. It's going to go up or go down. I realize how silly that sounds, but this is really it. Here you can mess around and you can do whatever you want, but it's either going to be 1, 2, 3, 4, 5. Right now, 6, 7, a 7 top. You know, like we're either going to do this or hopefully this is the 7th time we're going to break through it. But I mean, that's actually crazy to see how strong so much resistance up here. But hey, the lows are getting higher. The highs are not. Yeah. We'll have to wait and see. It's either way, we're getting into some sort of, turn that bloody thing off. We're getting into some sort of move. It's got to explode at some point. I know that's a badly drawn trend line there, but hey, we'll have to wait and see. I'll have to wait and see. Maybe you will get your this area.
How again, Alex? How again do you do that? Your anchored VWAP to where it does it in the 30-minute increments? How do you actually set that up again? I guess I didn't see that earlier.
It's just in here, and it's Lux Algo, the opening range and breakouts and targets. You can set it to a 30-minute time period. You can set it to 1 minute. You can set it to 1 hour or 2 hours or whatever you want. It's going to go back when I press this. But you can set it to essentially whatever you want. Now, I like to have it on that 30-minute time frame through here. But that's how I set it when I put it into this area. Yes. And the reason why
Lux Algo. Lux Algo has a lot of good indicators. Yeah.
They do indeed. All right.
Yeah, I use several of his. Couple of his.
There you go. Out at break even. we are out. We are out at break even. The position is closed.
Shriek.
It's a 7 top.
That reverse, even if it comes though, I don't want to get into that now. I just want fast.
Did it scare you off, Richard? Yeah.
Look at that.
That's
I'm
may I should just grow up there and trade the thing.
Yeah. What would Rassi say?
What would Rassi say?
Well, guys, that's it. What we got in the trade failed. I don't know what it wants to do here, to be honest. I've actually got no idea. I mean, it's not part of my strategy, so I don't care anymore. But your idea is as good as mine. We've got absolutely incredible resistance up here, and it seems like it's still intact, but we're not falling. So it is what it is.
Right on. Yeah, we can pass it back over to me. I can show you guys my pound Aussie real quick.
Sounds
pound
good.
Aussie dollar. Maybe take a look at some other setups, what I was looking at it on Bitcoin. But yeah, the pound Aussie. So yeah, just a reminder, we got the 1 hour zone, we got a 30-minute zone, we got 5, we got all kinds of zones in this area. So yeah, I just decided to take the bottom of the zone since we do have a 30-minute candle there with some really strong movement downwards. So kind of messed up my couple entries. That's why I got arrows everywhere. But yeah, I finally got I feel like a rookie sometimes on GUI trades. GUI trades making me look silly. But yeah, just a simple 4-hour downtrend. Just looking for that zone. Got that zone bounce, obviously. Real strong leg out candle. I mean, again, the only real thing I can knock it on is it's it's kind of going against my better judgment, but it does have quite a few candles to the left of the zone. So that's, if I lose this trade, that's why. Too much time spent likely gives the institutions and the banks plenty of time to fill their order to fuel this move. But we'll see. Still taking a stab at it because I am getting a nice bearish sentiment. So we'll see if this thing works out. But yeah, just looking at it on a 1 minute, it's basically been going sideways ever since. Well, I guess I did actually get into a little bit better trade on that final attempt. Yeah, my first was over here once we pierced and then kind of broke this line here. So that was my first attempt, but I ended up having my stop loss a mile high by mistake. Then I got into it here, and I don't know how I did it, but I had my stop loss like right here. I'm like, no, that's not enough. That's not enough. It's not enough of wiggle room. So finally, the last time I got into I put my stop loss up here above the 5 minute. There's a 5 minute zone. Did my computer freeze? Oh, okay, there we go. Yeah, so there's, looks like I lost connection.
It's the GUI.
It's the gremlins. Okay. So yeah, just going and digging deeper into this supply zone over here. Yeah, I decided to put my risk above this 5 minute zone. So that's what I'm going with. So not quite the above part of the 1 hour zone, just kind of trying to increase the value of my risk reward just a little bit. So it's about well, it would be 40. So it's about a 35 pip stop loss. So that's a pretty nice range. It's a pretty good range. Pound Aussie. What does that move typically in a day? Let me find out my ATR. I believe that was 100 pips a day. So it moves about 100 pips a day, 103.1 to be exact. So pretty good mover. So to have a 30 pip range, that's a pretty good that's pretty good wiggle room. So and then as far as a take profit goes, do have this little demand down here. People that are buying in this area on the way up, obviously their stops are going down here along with potential unfilled orders. So yeah, looking at that on a 15-minute time frame, this is pretty much where I put my take profit. Right there. So buy to cover just ahead of the zone. And that's it. Just going to ignore it and let it do its thing. As far as RSI, didn't really get as much help from the momentum as I wanted to see, but I mean, it was kind of turning around here on a 5 minute time frame with some higher highs. So we'll see how it goes. But yeah, meanwhile, I do have a Bitcoin setup going on over here. So I like what price is doing. Again, it's collecting sideways just ahead of my zone. So unfilled stop losses going below people stop losses going into the demand zone. So I like that. Go back to my 1 hour real quick. Yeah, so there's a 1 hour inside of a 4 hour. So getting a nice confluence. So I'm just basically looking to buy on the proximal line. Yeah. So I'm getting ready. I'm just looking to buy on the proximal line of the 1 hour zone. And kind of a similar picture. I mean, I got options here. Obviously, the more conservative stop loss would be to go below the 4 hour. But instead of that, I'm actually just going to leave it under the 1 hour. Yeah, just a little bit under the 1 hour. So we'll see how that goes. The reason is because this is all looking pretty efficient in this area. You got all the candles overlapping each other. That demand zone is the last candle, and then obviously down here as well. So the demand zone represents the one candle that has a big inefficiency above it. This gappy candle, this acceleration gap, fair value gap, right?
Gappy can.
And then obviously I got a stop loss up here. I'm sorry, a take profit up here. So we'll just let that one simply tap in. But yeah, I do like this. I love this. I like how it's hesitating. Again, and people are buying. Their stop losses are going in the demand zone, like literally inside of it. So that's sell orders. Banks need the sell orders and the unfilled orders to push price up. Yeah. So that's my play on Bitcoin. Now, it's not giving me a bullish signal. Again, it is a neutral score, but on a smaller time frame, I don't mind tapping into it. Just to try to catch a quick little day trade. Not as picky on the top setups are more for the bigger term, or the bigger picture, the longer term, right? For me, the 4-hour daily trades I like to take. I'm still on a smaller time frame. I'm not going to buy something if it's giving me a bearish score, like a -5, -7, whatever. I'm strictly staying in line with the overall bias. But I think Bitcoin was given a +1, a +2, something like that. Let me go double check. Well, actually, I guess it's. Yeah, just a short little guy on that one. Kind of where I'm setting for now, but yeah, it's trying to roll over the pound Aussie. Finally getting a red candle. Nice little upside down cup. Come on, I just need to break. Okay, so we broke that upwards trend line. Now the next step for feeling good would be just to get a little bit of a break under that point there, especially a break under that point. Then I'll be feeling much better about this trade. Because that was a pretty good up candle, or up move, that broke this high right here. So if we can break that leg, that'll make me feel a lot better about it.
Break its leg.
Right. Yeah, something like that. That's the path I would like to see this trade follow. Just need my magnet to suck it on down. Suck it on down. Let's go take a look at some more of my alerts. All right, so we got the Bitcoin, we got a pound dollar option over here, got a demand down here. So we had a demand up here. Price came down into the demand, collected those unfilled orders and pushed up. So that's a used demand zone. So definitely going to ignore it. And now we're left with this one down here at the origin of that strong move. I got me an alert set there. Same thing. Would love to see a little bit of manipulating right here before it goes in. That's really my goal. Get that liquidity. Get the traders confused. Are we buying or are we selling? Get some buyers in there.
Nice.
Put their stops down here, their sell orders to collect along the way with the unfilled orders, push price back up. So that's a 15-minute demand with a fair value gap. Like that one on the pound dollar. Still a ways away though. Aussie Swiss, yeah, not much has changed over here. I think I let off the show in the outset with this one. Yeah, it's a 10-minute demand if I go down to the 10 minutes. So that's pretty well the same. Now it is dropping into this demand up top here, but I don't really like demand at all because it wasn't strong enough to break that high. And then even at that, it's only about just not my favorite type of risk reward. I mean, that was a 12 pips. Yeah, 16. So that's about a 1.5 to 1. A little pricey too. We are in an extended up move on it. The reason I like this demand zone so much was that a 10-minute or a 5-minute? Oh, I guess it was a 5-minute. Double check here. Yeah. Okay. 5-minute. So the reason I like this zone so much is because when it broke up, it actually chewed through this higher time frame supply zone, showing strength. So that's this supply zone, and it had already been touched. It had already been mitigated once, but it's had the strength to chew through the rest of it. So that shows strength. And this was a higher time frame. So this was, I think, a 4 hour. Yeah. So way back in time, June 20th, that was when this 4 hour supply zone was created. It wasn't the strongest. We didn't have a ton of volume, but we did have a nice gap out that pushed all the way down here to the bottom. So, yes, sir.
Also, just went long gold. I had that little pullback. I had to join you guys. Whether it's now going to be successful or not, that remains to be seen. So I just took a small little stab here at gold. So maybe if we can quickly share my screen, if you don't mind. That'll be
cool. Yeah. Back to your screen, Richard. Yeah. Absolutely.
Right. So basically, just through a channel, this little bounce we had earlier on didn't come into this acceleration gap or fair value gap, some would call it, but sort of reacted to the center channel line. And we got this fair value gap that was unmitigated. So price just pulled back into that. It's a little bit of a risky one, but also just looking at the pattern, these higher highs, high low sort of formation. Again, as Alex pointed out, at that area of resistance that it's struggling to get through. I think if it breaks out, we're probably going to see a nice strong upwards, at least here on the smaller time frame, right? Or we just go down from here and I get stopped out. I think if the actual pattern that we've been watching here should continue, that should happen, right? So stop loss is just actually below these lows here, that high low. If price were to go all the way down there, then the pattern in my mind would be wrong. I'll be wrong, and I want to be out of this. So trading 0.1 lots, not a big trade, and hoping that price will break out and at least reach the upper channel line where I got my target. Right, slightly over 1-to-1. Obviously, I want it a little bit bigger, but I'm going to do a similar thing to what Alex was doing. Is that if we could see price move a little bit higher, get close to these previous highs, there where it's been struggling to actually close above, then I'll probably just move my stop loss as well to break even, and hopefully this time we get that breakout. Right, so that's the setup really quickly. Back to you, Tiger.
Yeah. Come on back over. As far as gold goes, I just initially threw out an alert down here. Yeah, that 3630 level, basically. Just looking for a deeper retracement. It might miss it. But if it doesn't, then I'll be waiting. Yeah, because it did kind of get the bounce already off the 1 hour demand. Now, again, I didn't really like overall the zone wasn't really that strong, I don't think, because it didn't even have enough power to break through this little high point over here. So, yeah, I might take a little stab at it if it comes a little deeper. But, yeah, ultimately my favorite is still this 4 hour down here. That's my favorite, and then this one here. But yeah, as far as the smaller scalp, yeah, I'm just looking for a retracement down to this area here. See if we can get a bounce. We got some funky little waves and ripples coming out of it. Looks really fun on a 5-minute time frame, doesn't it?
Tiger, did you have a look at the dollar CAD for sympathy?
Absolutely.
He says it's a strong demand on the 4 hour. Potentially give him a bounce to the upside.
Okay. Let me just get over here real quick. Just double check. 4 hour dollar CAD to give me a bounce to the upside. Yeah. What's your price point, Sympathy? Which demand zone are you looking at? I mean, my eyes on a 4 hour see this, except the problem with this one is it's already been wicked back into. So it's pretty well used up. If you know, it's already been touched. So we did have a little bit, and we didn't even get a fair value gap coming out of it. So I'm not sure just let me know what price point you're looking at, Sympathy, and we'll see if we can find that. Because the only 4 hour zone I would see would be, and let's double check here. Yeah. So you had one here. You had a demand here that already got touched and rejected. All this market's efficient in here because you got overlapping candles. So I don't really see a demand zone in this area unless we go a lot deeper, in which case we definitely have some down here. So down here, now that the yellow is a daily demand zone. But if I'm looking at a 4 hour, I think that, let's see here. It looks like that candle right there. That would probably be the only 4 hour demand I see, because you do have a little bit of a gap right here. Okay, so there's a little bit, not huge, but there's definitely a little bit of a gap here between this candle and this candle here. So ignore the leg out candle, but then you go to the candle after. So that's really the only 4 hour demand I see, unless sometimes, you know, different brokers, sometimes charts can look different from broker to broker. So I don't even know what GUI Trades has. Dollar CAD, 4 hour. Okay, so here we go. So yeah, this wick is a little bit higher up on the GUI Trades. So let's go back. I want to show you guys this. So this was the initial candle I was looking at, but you can see it's been touched. So hey, let's just do this. There we go. Okay, so there's a 4 hour demand. As you can see, that it wicked in on TradingView. So if we flip back over here to GUI Trades, it's a different picture. Okay, there's that same demand zone. And as you can see, it's not been touched. See that? Broker 1, touched. Broker 2, not touched. Touched, untouched, touched, untouched. So on GUI Trades, yeah, it looks good. But that's kind of the pain in the butt thing, is sometimes you gotta, again, Sympathy, yeah, if we look at it, just depends on the broker. Yeah, on GUI Trades, that looks great. So it's just kind of, it can be confusing at times, right? When you look at one broker and it tells you it's been mitigated, and then you look at another one and it says it hasn't. So yeah, that's just the way it is. But, you know, I mean, that's a 4 hour. What does that look like on a daily? Okay, so if you're looking at this on a daily time frame, okay, that is a daily demand because, well, we got a gap. See, this is the leg out candle from this candle. So let's just color in our daily candle. Okay, there's our daily demand. Of course, you guys know I always color them yellow on a daily. But let me just do this. I'm just going to take that out. So daily demand, right? So the daily demand has been touched, which looks a lot similar to the 4 hour on the other brokers. Yeah, I mean, the question is, do we want to take the 4 hour, even though it's been touched on one broker, but it hasn't on this one? Be worth a shot. Is that the zone you were looking at, Sympathy? Right there around the 1.3756 level? Otherwise, you got another one up here. Huh, I didn't see this. So you got another one closer, actually. Hey, you got one right here.
Mm-hmm.
Okay, that's not a bad looking zone right there. Oh, come on. Okay, that's a good zone. Okay, you had a gap, fair value gap, strong price. Price busted over these highs here. Okay, so that's actually the closest. Did I not see that over here? The 4 hour. Yeah, okay. Yeah, that's the one I was looking at. Gotcha. So, yeah, that's not a bad zone. 1.38, 1.3813 area, it looks like. 1.3816. Again, just depends on the broker that you're looking at. Yeah, I like it. What's our higher time frame tell us? So if I'm buying on a 4 hour time frame, I need to look at my daily for trend. Ideally, 4 to 6x difference. So 4 hours, so that's more than that. Or 8, 12, 16, 20. Like 8x, I guess. But yeah, daily. So yeah, we got a leg up candle. I mean, it's not a horrible spot. I will be honest, it would have been nice. It would have been I would have been happier with that 4 hour had it had enough strength to break through this top here. But you could always just go with this one. So yeah, if you go with that demand, you'd probably want to be a little bit conservative and maybe take your profits ahead of that supply zone right there. But and not only that, right? Dollar CAD is giving me a bullish bias. So if I just go back to my top setups real quick, and we got 4 minutes left. So yeah, just going back to my top setups, we are, if you look, dollar CAD's giving me a bullish score of an 8. So you've got no reports that missed expectations. Well, let me rephrase that. The Canada dollar missed expectations more so than the dollars missed expectations, if that makes sense. So you got a lot of neutral, but then you also have, looks like 6 different items that favored the dollar over the CAD. So yeah, from a fundamental point of view, it's a great trade. Same thing with the technicals. It's a great opportunity. So yeah, as always, we're not financial professionals. We don't make recommendations or signals, but if you were to place an order on that, it wouldn't be the worst thing in the world. As always, just put you a stop loss underneath, give yourself some wiggle room. That'd be about a 25 pip range. That's not too bad on an asset that moves not too much itself. Let's see here. Yeah. So the dollar Canada dollar moves about 55 pips in a day on average, right? So not too fast, not too slow. Might be just right for a lot of people. So yeah, if that's the zone you're looking at, that's really, I don't think it's a bad option at all. I just wouldn't be trying to take anything too crazy because you did actually bounce into a daily supply. Now that I see that. So the daily supply is usually stronger than 4 hour demand, vice versa. So that's just something to be aware of. You could probably, you might be able to get away with that. See how that works for you. Hope that helps. Looks like we got about a minute and a half left, boys. Go check real quick again on pound dollar setup over here to see if that's doing anything at the moment. Okay, so it's trying to roll over. It's just being slow about it. Out of my supply zone there. It's following my path tool so far. We'll see. Yeah. All right.
Cool.
Yep. That's a pretty accurate drawing.
Yeah,
So far.
We nearly reached the end of our session. Thank you, Sympathy. Again to Michael. Congrats from Unsigned for winning today's 5K Forex Challenge account. Again, guys, if you haven't won yet, we're going to be giving away a 25K futures account away a little bit later during the New York session. And right after the session, about 15 minutes, then it will be me and Coach James for the pre-market pulse. And we'll be taking you into the New York session where other futures coaches will be taking over, right? So if you want to win that 25K challenge account, please do stay tuned, like and subscribe to this channel if you haven't done so already. Join our Discord channel and all those goodies. Share it far and wide with all your friends and family. Anyone like-minded likes to trade, please share it with them. And yeah, that roundabout brings us to the end of today's session. Alex, nice finally meeting you, bud. I'll probably be regularly with you on a Mondays or Tuesdays. We'll see how things go. But yeah.
Absolutely. Perfect. Great meeting you too.
Good stuff. Good stuff.
Day, guys. Take care. Adios.
Thank you.
Alrighty.
Hola Prime. Trade with transparency.